Good morning, guys. We'll start with new topic today, that is Ind AS 116 leases, accounting for lease transactions or lease contracts. Again, a topic which we have done before. Yes, we have done in our IPCC, and we did something known as we had an accounting standard known as AS 19 leases or accounting for leases. Yes, so it's just a continuation of the existing thing for you, correct? So before we start Ind AS 116, can you tell me what you learnt in AS 19, accounting standard 19, or what you can remember from AS 19, so that we can build it from there? Okay, tell me, what is a lease first of all? Maybe we can start with that. Lease is what according to you?
Lease is where an asset's right of, the right of use of asset is transferred to somebody else.
Okay, right of use of the asset is transferred to somebody else. Or if you just go one step back, can I call in lease transactions or lease contracts? There'll be two person, lessor and lessee. Correct?
Yeah.
Okay, there'll be two parties, lessor and lessee. What does lessor do?
Lessor he owns an asset.
He owns the asset, okay, and he
Gives the asset
transfers.
to somebody else to use.
He transfers the asset, or he gives the right to use the asset. RTU, can I say?
Yeah.
Right to use this asset, he transfers to lessee, correct?
Yeah.
In return, what does the lessee do?
He pays the lessor something.
Since he got the right to use the asset for a certain period of time, let's say 5 years or 7 years or whatever is the lease contract, in return he'll pay some consideration,
Right.
which we'll call it as lease payment.
Yeah.
Okay, so this is nothing but the lease, correct? Two persons are involved, lessor and lessee, wherein lessor transfers the right to use the asset to the lessee for a certain period of time, and in return lessee will pay some money to the lessor. It's a simple lease transaction.
Yeah.
Okay, how should the accounting be done? What you learnt in AS 19? As per AS 19, what is the accounting that you learnt?
Like, you have to see whether it is operating lease or finance lease.
Okay, first step you used to check was whether it is an operating lease or it is a finance lease, correct?
Yeah.
Operating lease or if it's a finance lease. Okay, this is the first thing you used to check. Okay, you checked, you concluded it is a, how do you first of all find out whether it is operating or finance lease? There were certain factors, right? Yes,
Yeah.
factors. In fact, factors was there for finance lease. They gave certain indicators or factors determining finance lease. One of the factors was what? You remember any of them?
Like, for
Where
most of the period
present
of
value of
project,
lease payment,
lessor should have it.
economic life basically you're talking about. Okay. Or can I say this? Present value of lease payments approximates or is more or less equal to fair value of the asset.
Yeah.
This is one condition. And lease term approximates more or less equals to economic life of the asset. There were many conditions. Risk and reward is with the lessee bears the repairs and expenditure. Lease is of specialized nature where only lessee can use without making major modification. Like this, there were many, but for our problem's sake we used to test this and accordingly solve the question. Yes or no? More importantly, this. I forgot, no? Okay, I'll just give you a recap of this. Let's say the term of the lease here is 5 years. That means, let's say in this example, maybe just continuing. Life of the asset is 5 years, sir. Lease term is also 5 years. Okay. So since you get to use the asset, lessee gets to use the asset for 5 years, for which he has to pay lease payment.
Yeah.
Let's say lease payment is 3 lakh per annum.
Okay.
Are we okay? And the fair value of the asset, is equal to, let's say, 12 lakh rupees. Are we okay with this? There's some data I've given you. To determine operating or finance lease, first you used to determine whether it is a finance lease, you used to check the lease payment ka present value. Because how much is the lessee paying to the lessor every year? 3 lakh. Over how many years? 5 years. That means this is the 3 lakh rupees is the present value, it's a future payments. 3 lakh he has to pay at the end of every year for next 5 years. So total payment is how much?
15 lakh.
Total payment which the lessee has to make is 3 lakh rupees per annum for 5 years. So it will be 15 lakh rupees. Yes or no?
Yeah.
This 15 lakh rupees is going to pay now only or over 5 years?
Over 5 years.
So it's a future payment. First we used to find out the present value of this lease payment using a discount factor. Normally they used to give the discount factor in the lease of AS 19 problems. We used to find out the present value of this. Let's say this comes to 12 lakh rupees. This comes to 12 lakh rupees, correct?
Yeah.
So I've assumed this, okay? Let's say present value of lease payment is 12 lakh rupees at you use, let's say, 9% discount rate.
Okay.
You use 9% discount rate and you found it to be 12 lakh. I don't know. I'm not interested in the discount rate. I'm just assuming that it comes to 12 lakh. Okay? What is the fair value of the asset, sir?
12 lakh.
12 lakh rupees. Today, the value of the asset is 12 lakh and the present value of the amount that you're getting through lease payment is also 12 lakh. Yes or no? I mean, think here, is lessor really interested in the asset or he literally sold the asset in a way? He literally sold the asset, but we're not calling it as a sale because the value of the asset is 12 lakh, correct? And the present value of lease payment that you're getting is also 12 lakh. Yes or no?
Yeah.
Hence, we can conclude that this is what kind of a lease? A finance lease. Yes, that's what you used to do. Till now, I'm talking about only about AS 19. All this you have done. I'm just giving you a recap. Why am I giving? I can build it from here. Hence, fair enough? Yes. Another factor to determine was we used to take the lease term, correct? What is the lease term, which I'm going to call as LT? Lease term is 5 years.
Yeah.
Lease term is 5 years. What is the life of the asset, sir? Or useful life of the asset? Useful life of the asset is also 5 years. Means you think practically who's going to use the assets for its entire useful life now? Lessor or lessee? Lessor owns the asset, no doubt. But asset ka life is 5 years and the entire 5 years who's going to use the asset? Lessee. I means all the benefit related to that asset, who will get? Lessor or lessee? Lessee. Hence, AS 19 used substance over legal form accounting. Though lessor is the legal owner, but in reality is all the benefits related to asset, who's getting? Lessee is only getting. Let him only show the asset. Let lessor de-recognize the asset because he's currently the owner. That means he's currently showing that asset. Let him de-recognize or cancel the asset in his books and let the substance owner, that is the lessee, only show the books. Show it as asset in his books. Correct? This is what the funda of AS 19 was. Correct? No? Fair enough? So legal ownership was irrelevant in AS 19. We used to check in substance mein who's using the asset and who's getting the benefit. Okay? He would be considered as an owner and accordingly he will record that asset in his books. So if it is a finance lease, normally what you used to do? Lessor is the legal owner, so it means he's showing the asset. If it is a finance lease, he has to de-recognize the asset. Why should he de-recognize the asset? Because he is not interested in the asset. He's not interested in using the asset. He is a pure financer. He's a banker. He's giving a loan to the lessee for buying the PP. He's a pure financer. He is interested in the finance charges that he gets. Banker, correct? He's just a financer. Hence the name finance lease. Got it? Since he's a finance lease, since he's a financer and not interested in the asset, let him not show the asset. Let him show it as a receivable. Instead of asset, he will show it as a receivable. The meaning he has to receive the money from lessee. How much money is this? 15 lakh totally he has to recover. Let him show that as a receivable. From asset, the accounting shifts to receivable. Correct? If it's a finance lease. And what does the lessee do? He will record the asset. If he is recording the asset, can he claim depreciation? Very much yes. Correct? So he will, he'll do that wala accounting. Got it? This is what AS 19 you used to do. All this you have done before. I'm just giving you a recap. Is it okay? Substance over form. Ind AS 116 takes it one step even further. Or maybe let's continue in this example. Maybe I'll just modify this example. Okay? In this case, you tell me. Lease term. How much was the original lease term? 5 years. Okay. Let's say lease term is 14 months.
Okay.
Lease term is 14 months. Life of the asset is still 5 years. Okay. the present value of lease payment. I'm not giving total lease payment. I'm giving you present value of lease payment itself here. Okay. Let's say that is 4 lakh rupees. And the fair value of the asset is 12 lakh rupees. This is the scenario. Now, can you tell me, according to AS 19, whether you used to treat this as a finance lease or an operating lease?
Operating lease.
Or maybe let's make this, if months is confusing for you, let's make this as 1 year.
Operating lease.
Or maybe 2 years we'll make. Okay? 2 years. Fine? And maybe life we can also even further enhance it anyways. Life I'll make it as 8 years. Okay? Life of the asset is 8 years. Lease term is only 2 years. Fair value of the asset is 12 lakh. But present value, not total lease payment. Present value of lease payment is about 4 lakh rupees. Now, what are the conditions to test finance leaser? 2 conditions normally we test is present value of lease payment approximates. It should not be all. It should not be. Standard did not use the term equal to. It used the term approximates, meaning more or less equals to what? Fair value of the asset. Yes, no. If fair value was not given in your IPCC problem, you used to take cost itself to be fair value and do the accounting. Correct, if you remember. Anyways, no problem. So, what is the present value of lease payment here? I've assumed 4 lakh. Is 4 lakh approximately equal to 12 lakh, sir?
No.
Definitely not. Yes or no? This is one. And say, what is the lease term, sir? Lease, for another condition for a finance lease is lease term should be equal to useful life of the asset or economic life of the asset. What is the useful life or lease term? 2 years. Useful life of the asset is 8 years. Is 2 years approximating 8 years, sir, or it is way too different? Way too off. That means what is the conclusion? Therefore, you will treat this as operating lease. Correct? Yes. If it is an operating lease, what do you used to do? Now, lessor is not a financer. He's giving the asset for 2 years. Then he'll take back. I mean, now is he a financer or is actually interested in the asset? Is actually interested in the asset. Hence, the standard recommended what? Let him not derecognize. Treat it as your PUC wala journal entry. Like rent paid, rent received. Lessor will treat it as a rent received, which is an income. Lessee will treat it as rent paid, which is an expense, and do the accounting. Fine, no? So, no asset and all will change hands. Just expense and income wala accounting. Correcto? This is what for operating lease AS 19 recommended the treatment. Any confusion so far, sir? Any confusion? No, sir. Sir, did we actually start the topic? Not at all. We are still doing your, you have IPCC mein, matlab, you have in CA final IPCC AS 19 or Ind AS? Ind AS. Why did I give all this drama to you is Ind AS is just a continuation from here. Ind AS doesn't bother about operating or finance lease as far as lessee is concerned. Lessee, he doesn't have to bother whether it is an operating lease or whether it's a finance lease. What Ind AS ka funda is, look boss, what is the life of the asset? Life of the asset here is what? Maybe we'll take this example. What is the life of the asset? 8 years. Correct? Lessee gets to use the asset for how many years? 2 years. Correct or no? Does he have, can he, in these 2 years, can he determine how much to use, when to use? Let's say it's a machinery. For 2 years, can lessee decide how to use it? Yes. Can he decide how much to use it? What to produce from it? Where to store it? How to get its repair done? So that means lessee has a control over that asset for 2 years. Correct? Since you have a control over the asset for 2 years, let him show the asset. It is taking the substance over form accounting little further. Doesn't matter. I understand. Like life may be 8 years. Correct? He may not have control for all the 8 years, but he has control for 2 years. For 2 years, let him show the asset and let him depreciate that asset. That's all is one step further of Ind AS 116. Got it? So hence, lessee will not bother whether it is an operating lease or a finance lease. Fair enough? For how many years he has a control. For that, he will record something. In fact, we already called out this. I told we'll do it in detail. Hence, in lessee's books, I told, as per Ind AS 116, 2 things we always record. You remember? One is ROU, right of use account. And he has to record something known as lease liability. So, as per Ind AS 116, correct? Lessee will always record 2 things. What is that 2 things, sir? He will record. He will record he got the right through this lease term of 2 years. He got some right to use the asset. So he has to record something known as right of use account. That is ROU. Correct?
Yeah.
And he has to record something known as lease liability. That is LL. For ROU, in my example now, how many with this ROU will last for how many years, sir? In my example, since the lease term was 2 years, ROU, he has a right to control over the asset over 2 years. So that means ROU is like PP here. Very much yes. Except that you don't show it like as PP, you give a different fancy name to it known as right of use account, so that the users of financial statement know it. PP means it will lead to an indication that you own that asset. Legally, you are the owner. But legally, does the lessee own this asset?
No.
But he has the right to use. Correct?
Yeah.
So hence you will show in your balance sheet as right of use account. Fair enough? Under non-current assets only, right of use account. And you will apply all the provisions of PPA also for this. Meaning cost model or revaluation model, depreciation, all this drama will be done for ROU also. Got it? And lease tells you how should you value this ROU. Because you did not purchase this right, no? It came as part of lease arrangement, right? So how to value this ROU initially? Lease Ind AS 116 will give. Initial measurement you do as per Ind AS 116. Subsequent measurement you apply Ind AS 16. As simple as that. If it's a physical asset. Correct? No. Manageable.
Yeah.
Confusion is here. Okay now.
Okay, sir.
So ROU ka funda is clear for you?
Yeah.
Second funda, lease liability. Why should I record lease liability, sir?
So you have to pay money.
Correct. In this problem, lease term was 2 years. He got the right to use free of cost, or he has to pay some money towards it.
Yes, pay some money.
That means he has an obligation, sir.
Yeah.
He has a contractual. Look, screen ko dekho up.
Yes,
He has a contractual obligation to pay cash.
yes.
That means this will be accounted as what? A financial liability, and Ind AS 109 ka treatment will get triggered. And which, as per Ind AS 109, these financial liabilities are only two methods, two ways in which you can account financial liability. That is amortized cost method or FVTPL. Here, since we have a contractual obligation to pay cash at a periodic levels, what do you think it will be?
ACM.
ACM method. So we have to apply ACM method ka all drama for this financial liability. Meaning that interest table we used to do, remember, amortization table we used to call it, and the journal entry you remember, columnar ka? All the journal entry will follow. Hence I told in Ind AS 109, this will see, you will see it in leases also, if you remember.
Okay.
Correct? That's all.
Yes.
Fine. This is what lessee has to do. Lessor may will temporary will ignore, or if you want it, lessor has to still consider whether it is an operating or finance lease and do the accounting. In lessor books, AS 19 concept still holds good. He has to determine whether it's an operating lease or finance lease. But for lessee, it doesn't matter whether it is operating or finance lease. He will record these two components. Done now.
Yeah.
That is the funda. Did you get the funda of Ind AS 116?
Yes.
Can you just give me a quick overview so that I can proceed?
Okay, so let's
Again, which form of accounting is this first of all? Which form of accounting? Substance over legal form. Okay, go on please.
Yeah, so in a lessor's book, we still have to do the operating lease and finance lease or bifurcation and accordingly account. But in lessee's book, irrespective of finance or operating lease, we have to record one asset, record one liability.
Perfect.
Asset is right of use,
Perfect.
and subsequent measurement of that right of use is basis the PP standard.
Yeah, awesome.
Lease liability, lease liability is a liability that we record, and the liability will be measured as per Ind AS 109.
Perfect. Learned everything now. I mean, Joy, you don't need me at all. Over. Finish topic. Much fun, na. This area ROU we've done. Lease liability we've done. We'll finish off then. Yeah.
So one doubt, sir.
Yeah. Okay. Yes, tell me, sir.
Initial measurement of lease liability will be equal to ROU or what?
Yes. Perfect question. Initially, both of them will be measured at same value. We have wrote this.
Okay.
You wrote this. When you did business combination, there was one lease. There you remember. Initially, ROU is equal to LL you wrote. If you just refer your notes, I think I have dictated that. Yeah? Yes. Initially, both will be recorded at same value.
Okay.
So that means ROU will be recorded at present value of lease payments, sir. Very much yes. Correct. You have to find out the present value of lease payments. At that value, you will record LL, that is lease liability, and right of use. There afterwards, you will go on depreciating ROU. So its value will go on reducing. None? It's not that easy. There will be certain adjustments coming in. Okay, there will be adjustments coming in. Okay, so we'll have to adjust those adjustments. Without any adjustment, this is your treatment. Yes. Fair enough. Plain treatment is this. Plain vanilla andre either. Okay.
Yeah.
But they will give you certain extra adjustments, which we will see.
Yeah.
Just now we started, no? So I don't want to talk about all those adjustments that we see. Fine, no?
Yeah.
All right. Any other doubts?
No, sir.
No. All right. Fine. So that means this accounting is going to be quite big, sir. One, the main problem is if you have to find out lease liability, how do you find out lease liability?
Lease liability.
See, in this example, lease liability is in this example maybe the lease term is 5 years. Every year, how much is the lessee required to pay to the lessor as lease payment? 3 lakh.
3 lakh.
That means total lease payment is 15 lakh.
Correct.
Can we use total liability and account it as a lease liability, or we have to find out its present value?
We have to find out.
Oh my god! If you have to find out present value, you have to use discount rate.
Correct.
And that discount rate should be EIR, effective interest rate. That means you have to find out EIR, correct? And then do amortization table accounting for all the 5 years. Yes, I mean this accounting is going to be quite lengthy. Let the aside possible because it's not that straight. Finding out EIR is also not that straightforward. You have to assume that means it's going to be lengthy, correct? No. Hence they said, do you think this treatment can be recommended for all leases? Even if for small leases and all, if they start recommending this, it'll be crazy. Yes or no? Hence they said, let us give some recognition exemption. Meaning all this drama you need not do. What drama? Lessee need not account ROU, nor he has to show lease liability. For few leases, for few types of leases, let him not do this. Call it. So we will give you certain recognition exemption. Fair enough. Got the idea of it?
Yeah.
So those two recognition exemptions are, if you have anything you are writing, sir? Can I? If it is a short-term lease, and if it is a lease of low value items, LVA, if it's a short-term lease, and if it is a lease of low value items, you don't have to do all this ROU, and like that LL ka drama. You can use your PUC approach. PUC approach means, or AS 19 ka operating approach. Operating lease, what you did? Lease paid, lessee will treat it as expense. Lease received, lessor will treat it as an income. Meaning lessee will just record it as an expense. Got it? Are we okay? But one catch there is, he has to record this expense on a straight line basis. Meaning expense has to be same every year. If there is any difference between, then he has to recognize that as a prepaid expense or outstanding expense. Like that. That's all. But expense book to be P&L should be on a straight line basis. Are we okay? Possible that lease term can increase or decrease. Okay. That increase or decrease, either you will treat it as a prepaid expense or you will treat it as an outstanding expense and do the account. Fine now?
All operating lease?
No. There is no. Recognition exemption is for lessee. Okay. Now going forward, the moment you hear the term lessee, you will never utter the word operating or finance lease. That operating or finance lease is only applicable for the lessor. Because through operating lease or finance lease, you are trying to find out whether lessor is a financer or not. Correct? That is the intention. Correct? So we are not doing lessor ka books. We are doing in the form of lessee. Lessee has this recognition exemption. I'm not even going to. Okay? For the first 2 days, I will not even utter the word lessor. Okay? It's a lessee biased wala topic, you could say. Many not that we're not going to do it for lessor. Okay? But most of the things are going to be driven by the lessee perspective. Fair enough?
Okay.
So lessee can take recognition exemption. Okay? On two types of leases. One is short-term lease and low value assets, LVA. Fine. So lessee will not have to bother whether it is operating or finance lease. The moment he concludes that it is a short-term lease, or the moment if he concludes that it is LVA, low value items, he can, sir. It's a can. Maybe box this also. Meaning optional exemption. If he wants, he can use the exemption and do simplistic accounting. Simplistic accounting, Andra? Don't have to do ROU, LL and all. Lease paid, you treat that lease rental as an expense, like operating lease. Okay, treat lease paid as an expense. Fair enough, he pays only, no? Correct? But one catch there is, he has to recognize his expense on a straight line basis. Underline that also. Fair enough? If there's any difference, then he has to recognize what? The difference will be treated as a prepaid expense or outstanding expense, and accordingly adjustment will be done. But every year, the amount of expense you transfer to P&L should be same. That should not change. Got it?
Yeah.
Yes. Any case study beka idike? Straight line basis ko you understood? Want a small case?
One example, sir?
One example. Okay, maybe we can take this. Okay, lease rental. Year 1, 10,000. Year 2, 12,000. Are we okay?
Yeah.
Both two parties got into a lease agreement saying lease rental, first year you have to pay me 10,000, second year you have to pay me 12,000. Okay, let's see, concluded that it is an LVA, low value assets. I'll tell you what is LVA in the meantime. For the time being, we'll treat it as LVA. Fine. How should the accounting be done? If it is an LVA, he can opt recognition exemption. So solution mein he can take lessee can adopt. Can I write LE as in lessee? Lessee can adopt what? Recognition exemption. If lessee chooses recognition exemption, then he doesn't have to do that ROULL ka drama. So first he has to recognize the expense. What is the expense to be booked every year?
Yes, straight line.
Straight line. That means expense should be same every year. Find out the average expense. First year expense is how much? 10,000. Second year expense is how much? 12,000. Divided by 2. How much is this? 11,000. That means every year he has to book how much? 11,000 as an expense in his P&L. Got it?
Yeah.
But first year he paid only 10,000, no, sir. Yes, your expense will be 11,000, but he has paid only 10,000. That means outstanding expense will be 1,000. Fair enough. Like this. Suppose this was not 11,000, this was only 8,000 then. Or maybe we'll do up this entry. Tell me the entry for this or else. Entry in the journal entries in the books of lessee. What will be the journal entry? Simplistic will be what? Lease rental expense, can I say?
Yeah.
Lease rent expense account debit. Expense mean it will go off to PRL?
Yeah.
Okay, how much will be the expense booked? Contract value of 10,000 or straight line value of 11,000? Straight line value of 11,000. Correct?
Yeah.
To bank account, how much? But he paid only 10,000 for the first year.
Yeah.
That means balance will be, you'll treat it as outstanding lease rental 1,000. Got it?
Yeah.
This is for year 1. Year 2 can we pass or any doubt is there? Okay, second year will be lease rental expense account debit. Since the expense on straight line expense will be accounted, same. It will go to PRL only and the amount will also be 11,000 only.
Yeah.
To bank, how much did he pay in the second year, sir? In the to bank, how much did he pay in the second year? 12,000. That means to bank, how much? 12,000. There is a balancing figure.
Yeah.
At 1,000 he had to pay. We booked as outstanding lease rental, no? And outstanding over. So reverse. That means here you'll write outstanding lease rental account debit. Account debit 1,000. That's all will be the entry. Got it? This is not there. If you want, you can copy this in your any of your study material. This case is not there. Fair enough. They only told book it on a straight line basis. Actually, they'll give you operating lease adjustments. In a way, it gets covered there. Easy? That's all, sir. Here I took an example of outstanding. Yes, possible that instead of 11,000, this is 8,000.
Yeah.
If it is 8,000, assuming that our expense to be booked is 8,000, can you tell me what will be the journal entry, sir? If this is suppose 8,000, then the journal entry will be here instead of lease rental expense account, how much it will be? 8,000, but you are paying 10,000. So you will treat it as a prepaid lease expense. Fine. So in that case, the journal entry will be LR expense account debit 8,000. Prepaid expense account debit 2,000. To bank account 10,000. Correct? Next year accordingly it will be adjusted. Fair enough. That prepaid will get adjusted in the next year. Like that. That's what we mean by prepayment or outstanding expense. Easy now?
Yes.
Okay. Move on to the next one. Ilo barkota idira.
Barkote.
Okay. You want me to show the case?
Yeah.
So as per contract, okay? How can lessee adopt recognition exemption? Because we concluded that it is a low value assets. I've not told you how to identify whether it's low value asset. That will come in a bit. If you want, you can write full form also. Low value assets.
Yes, sir.
Moment. Fine.
It says either straight line or systematic basis.
Any other systematic basis. Here actually the book says any straight line basis you can record or any other straight line systematic basis. Same. Depreciation, you remember, you can choose any method that reflects the pattern of transfer. Like that. If you can prove that any other method basis is much better presentation of lease, you can choose. But in a practical constraint wise, we'll always book it under straight line method. In all your problems concerned, we'll be doing it on straight line basis. Theory allows you straight line or any other systematic basis. That is case to case basis, which is difficult to test in examination. Hence, we'll adopt straight line basis only. Fine now? But actually, yes, straight line basis or any other systematic basis also is allowed. Fine now? Correct? So yes, now it makes sense. Correct? No? Recognition exemption. So that means now we need to know what is a short term lease, what is LVA, because we know if it is short term lease or LVA, how we should account, we know. Only thing we need to know now is what is a short term lease, or how to find out whether lease is a short term or not, and what assets can be called as low value assets. Okay, short term lease means that satisfies two criteria. Short term lease means is a lease that satisfies two criteria. One, here it is given. Or maybe even I can write short term lease, can I call it as STL? This is STL ka features they have given. Okay, it's not, heading is not given, but you can write STL. STL means short term lease. Short term lease is a lease that no space at all. Okay, maybe I'll zoom and write. Fine. No, short term lease is a lease that satisfies two criteria. First is the LT. LT means lease term is less than or equal to 12 months. Lease term is less than or equal to 12 months. 2. Lessee does not have option to buy the asset. Does not have option to purchase the asset. Purchase the asset. That's okay. We can write this. Fine. So if these two criteria are satisfied, we call it as a short-term lease. What are the two criteria? Yeah. And it is. My bad. You write add. And both the criteria should be satisfied. One, the lease term should be lesser than or equal to 12 months, and two, he should not have any option to purchase the asset as part of lease, because some lease will have that option. No, use that asset for 5 years. After that, you only buy it. It's okay. Contracts will have it. At the end of the lease term, lessee has an option to buy the asset. Like this will be there. That option should not be there. If those two are satisfied, means you call it a short-term lease. Logical, yes or no? If the lease itself is less than 12 months, why are you bothering about lease liability and like ROU? Because everything will go off to P&L only. Because ROU also will depreciate within 1 year only. Lease liability ka drama also will be over within 1 year only. Why are you chumma asking him to find out IRR and do so much of accounting? Makes sense. Let him follow the straight line method accounting. Fine. And two, let him also not have an option to purchase the asset. Because if he has option to purchase the asset, he does not have ROU only for 1 year. Rather, legally he'll become the owner now. Correct? That means he has right to use not just for 1 year. As per the contract, it may be just 1 year. But after that, he'll get off the asset. Correct? Then it is not a short-term lease. Fair enough. So both should be satisfied for you to call it as short-term lease. Easy?
So one doubt.
I'll tell you the next point. Maybe your doubt is that only. Yeah? This lease term, lesser than or equal to 12 months, no, should be found out on the lease inception date. Meaning, let's say originally the lease term was 5 years. Originally, let's say the lease term was 5 years. Correct? 1 year over, nothing, no problem. 1 year over, everything was fine. That means lease term remaining is how many years? 4 years. Second year beginning, they decided that let's cancel the lease within 8 months. We'll continue this. Some drama happened. Okay. Some issues happened. Lesser and lessee wants to cancel the asset now, or lease term. They want to just continue this lease term only for 8 more months and cancel. Correct? So that means what? It is less than or equal to 12 months, sir. Now let's classify this lease as a short-term lease and account to the simplistic accounting. Not permissible. Fair enough? This less than or equal to 12 months lease term is there, no? That should be determined on the lease inception date. On the day you got into the lease arrangement only, you have to find out whether the lease term is less than or equal to 12 months. Are we okay? Now in this my example, is it a short-term lease? You tell me.
In this case, it is not.
It is not. Why? To find short-term or lease, you have to check on the lease inception date. On the lease inception date, the lease term was 5 years. It is greater than 12 months. Hence, it is not a short-term lease. Subsequent reduction in lease term will not make a lease as a short-term lease. Fine, huh? That is one exemption they've given. They've called out this also here. If you want, you can write down that. It's there in your chart also. Here also it is there. If you want, you can just underline that. As the determination is made at the commencement date, lease cannot be classified as short term if lease term is subsequently reduced to less than 12 months. Subsequent reduction will not affect your classification. Any other doubt you had, or is this the one? I'm not sure.
One doubt.
Yes, sir. Tell me.
So in PP, why don't we have that if the life is less than 1 year, we can not recognize?
Which one? If PP, no, it is there.
PP, if it is less than 1 year, does it specifically say so? We don't recognize.
Tell me the PP ka recognition criteria.
We should have,
Feb and cost measurement, correct? And in fact, that is the recognition criteria. In fact, before that, PP had some definition criteria only.
Yeah.
What is that?
It
should be used in the production of, it should be a tangible asset. Held for use. The usage is what? Production of goods, rendering service, administrative purpose or rental purpose. What is the third feature, sir? Used for more than one period. That one period constituted 12 months only, no?
That period doesn't mean 12 months specifically.
Yeah, specifically I told it is 12 months only. I told specifically 12 months because like more than 12 months only if you're getting the benefit, then only it makes sense in accounting. It satisfies the definition of PP. If it satisfies the definition of PP, then you will look to check the recognition criteria, which is Feb and cost measurement. Then only you will recognize it as PPE and show it in balance sheet. Correct? No? Correct? If the benefit is less than 12 months, no point in showing it as PP according to me. Anyway, you're going to amortize it off in P&L only. I mean, you're going to depreciate it off. Yeah, it is there. More than one period. Correct? That period you can interpret it as 12 months, I told you. Fine? Okay. Any other questions, sir? No. Can we go for solving one question now? Let's see how well we have understood. I mean, short-term lease means 3 things you have to keep in mind now. 1. Lease term should be lesser than or equal to 12 months. As on the lease inception date. On the contract, the original contract date, lease term should be 12 months or lesser. Second one? No option to lessee should not have an option to purchase the asset. 3. Subsequent reduction in the lease term will not affect the classification because classification is made at the inception date only or the original only. Okay, let's see how well we have understood that in one other case. Question number 1. Are you able to see?
Yes.
Okay. Lessee enters into a lease with 9-month non-cancelable lease. Box that, sir. 9-month non-cancelable lease term with an option to extend it for another 4 months. Lease term is 9 that they mentioned, but he has an extension option by 4. So it makes it 9 plus 4, 13. Okay. So lessee does not have an option to purchase the asset, meaning he does not have purchase option. At the lease commencement date, the lessee is reasonably certain to exercise the extension option. Underline the word exercise the extension option. He's reasonably certain that he's going to exercise the extension option. Why? Because the monthly lease payment during the extension period are significantly below market rates. So lessee is reasonably sure at the contract date only that he's going to extend it. Meaning it's not going to be just 9 months now. It's going to be 9 plus 4, 13 months.
Yeah.
Because during the extension period, let's say the lease rental in the market is 10,000 per month. But lessor told you pay me only 8,000. That is good for me. I mean significantly lower than market rent. Yeah. Hence, he is reasonably certain that he'll exercise. Now tell me, sir, what will be the lease term? Lease term in the first scenario will be how many months? 13 months. Yeah. Correct. Lease term will be what? Non-cancelable. The non-cancelable term plus the renewal period.
Yeah.
Non-cancelable period is how much, sir? 9 months plus renewal period is 4 months. That means the lease term will be 13 months. Sir, can you add a renewal period also to lease term, sir? Very much yes. Lease term, there's a separate concept. You add 3 things or 3 things can be considered for lease term. Next concept I'll tell you. Fair enough. Even renewal period can be added provided lessee is reasonably sure that he is going to renew it. If lessee is not reasonably sure means, in this case, had they told lessee is not reasonably sure, then the lease term would have been only non-cancelable term of 9 months. Fine?
Yeah.
But in this problem, he is reasonably sure to extend Hence, lease term is 13 months. Okay, now you tell me, sir, whether it is a short-term lease.
It is not.
It is not a short-term lease because the lease term is greater than 12 months. Hence, therefore, lessee will not account the lease as short-term lease. That is the conclusion. Manageable? Easy? You have another scenario. Can we go for it? Assume the same facts in scenario A, except at the lease commencement date, the lessee is not reasonably certain to exercise the extension option because the monthly lease payment during the optional extension period are at what lessee expects to be market rate. So we're not getting any reduction. Is it at market rate? Hence, lessee is not reasonably certain. Okay, so there are no other factors which would make the exercise of renewal option reasonably certain. What would be would your answer be different in this case? Since lessee is not reasonably certain that he will renew it, lease term will only consist of non-cancellable term of 9 months. Hence, the lease term will only be 9 months. If it is only 9 months, means it is obviously lesser than 12 months. Hence, now it will be what? It can be considered as a short-term lease. Correct? That means you can use a recognition exemption available for short-term lease. If you use recognition exemption, what will happen? Lease payments. Should lessee show ROU and lease liability and all? No. You can use simplistic accounting. The lease payments can be considered as an expense. On a straight line basis, you can book it, or any other systematic basis. That's it. Got how to answer, or should I have to show, or easy? Understood. So that means you just have to, it may become for 2 or 3 marks. You just call out what? First, you will find out the lease term. Just give quick notes. You will find out LT as in lease term. Maybe I'll write the full form here. First, you will find out the lease term. To find out the lease term, you will say that what? It is non-cancellable period plus renewal period. Here renewal period, in fact, you can just say lease term and say here renewal period cannot be added because lessee is not reasonably sure to exercise that renewal option. Okay, no? You want me to dictate?
No, sir.
Okay, so that's how you will find out the lease term. Then what will you say and conclude that this is a short-term lease? And you conclude that this is a short-term lease. And if it is STA, we can use recognition exemption. So recognition exemption can be adopted. Will be or can be? Can be. So if it is adopted, then you will say the accounting treatment. If it is adopted, then what? Then lease rental will be accounted as expense, correct? Lease rental, book it as expense over what basis? On SLM basis or any other reasonable basis. These are the few pointers you need to write in your examination. That's it. 2 to 3 marks, they may ask you the case study. That's it. Manageable, huh?
Yes, sir.
Okay. Majority of the question are case driven, okay? Some last bit, you have like at least maybe 7-8 questions, you will have the lengthy questions. Can I move on to the next one, sir? Yeah. So recognition exemption was available only to one, no? No, it was available to short-term lease as well as low-value assets. That means next we need to know what is low-value assets. That is LVA we are calling, correct? No? Low-value assets. So low-value assets means that asset which satisfies 2 criteria plus 1 condition. What did I say? For it to be low-value asset, it has to satisfy 2 criteria. Correct? Plus 1 condition, extra condition. You could say 3 factors should be considered. You can call an asset as a low-value asset. Asset itself, you can call it as a low-value asset provided 2 conditions are satisfied. That is the same as distinct goods or service ka condition. Let's remember whether you revised Ind AS 115 ka revenue. Performance obligation, we said it's a promise made in a contract with the customer to deliver what? A distinct goods or service, or a series of distinct goods or service which are substantially same and have the same transfer pattern. Correct? First criteria was distinct goods or service. You can call a goods or service as a distinct provided 2 criteria are satisfied. That is same as asset ka criteria. Can you tell me how can goods or service be distinct?
Separately you can use it.
If they're used to say if customer can use the asset, can use that goods independently on its own or with existing resources. Second one, it should not be highly interrelated or interdependent. Same thing here also. You can call an asset as LVA provided, here not it will be customer, it will be lessee. But if lessee can use the asset on its own like independent asset or by combining with existing resources. 2, it should not be highly interrelated or interdependent. If that is the case, means you can call an asset as an LVA. Okay? Yes? Same features. Yes? Okay?
Yeah.
Any confusion idea or okay now?
Okay, sir.
Third criteria is sublease should not be done.
Okay.
Sublease means what?
You took your lease and you are giving a
Lessor gave an asset to lessee. Okay, that means who should use the asset? Lessee.
Yeah.
Lessee did, I don't want to use the asset. I will find another guy. Okay, and give it to him. I found another lessee. We call it as ultimate lessee.
Yeah.
There's another name for it. I'll not use it for the time being. It's okay. You will find another lessee and I'll give the asset to him. That means what? Lessor gave the asset to lessee. Lessee gave the asset to another lessee.
Yeah.
Correct? So this is known as what? Subleasing.
Sublease.
This normally you do know. You do with a PG arrangement and all. If you are staying in a PG, it's a 2-bedroom house. But you are only one person. Correct? You took the house from the landlord. And one room you don't want means what will you do? You'll find another tenant. Correct? Or let's say for 2-3 months you want to vacate it. Fair enough. If you vacate it, you have to pay painting charges and all. That's a normal practice. In Bangalore, they recover. Yes or no? In most other places also, I believe they recover. At penalty, 2 months rent or some painting charges and all, they'll recover. Okay. So instead of that, you said like, I'll give off the rent to somebody else. Basically, just you kind of giving it off to somebody else. Correct? That we call it a sublease. So you can use you can call it as low value assets and you can use recognition exemption provided it satisfies the low value asset condition. That is, use on its own, correct? Or with the existing resources. 2, it should not be highly interrelated or interdependent. 3, you should not sublease the asset. If this is the case, means you can use recognition exemption, otherwise no. Fine. So that means every asset will become LVA, no sir? No. So what they said is, this is trying to capture like those assets which are high in number but low in value. Like computers and desktops and all. They've called out actually examples of low value items. That is laptops, tablets, mobile phones, furniture, printers, etc. etc. These will be coming under low value assets category. Because normally think about an organization, let's say software, let's say a company. Okay, they require 100 computers, but they don't want to buy it. Or let's say they require 1,000 computers, they don't want to buy it, and they took it on lease. Contract value is 10 crore or 10,000. Let's say contract value is 10 crore. Fair enough. They enter into a contract to lease how many computers, sir? 1,000 computers. A contract to lease 1,000 computers at 10 or at 10,000 each per computer, or 10,000 at 10,000 per computer, and the contract value will be how much now then? 10,000 computer, each ka value is 10,000. That means it will be 10 crore. Yes, you got into this lease arrangement, sir. Fair enough. So when you look at the contract value, it looks 10 crore is huge. Let's say this turnover of this company is only like, let's say 50 crore. For a 50 crore company, 10 crore contract looks huge. Yes or no?
Yeah.
So ideally it looks like it's not a low value assets. Ideally, because looking at the contract value, it looks huge. Correct? No. Yeah. But is the value of one computer 10 crores, sir, or value of one computer is only 10,000?
Only 10,000.
10,000. Correct or no? So such a type of components can be treated as LVA. Fair enough? They are huge in what? Number. Check. 10,000 computers. Huge in number, but low in value. Value means don't take contract value. Per value you take. Fair enough? Yeah. Number of items are more, but their value is lower. So LVA exemption is given to capture those assets. Fair enough? For those assets also, you can use LVA exemption. That means what, sir? Each computer will be treated as a separate lease and you'll have to do the recognition exemption. And for accounting purpose, we can pass one journal entry and do it. Fine. Meaning you can analyze whether an asset is a low value asset or not on a one-on-one basis is what they're trying to say. Enough. If you have multiple assets, on a one-on-one basis, you can analyze the asset and find out its value is big or small according to you. This is subjective. Organization to organization. They have not defined any limit. So basically, management and auditor have to take a call what is LVA for that particular company. Like audit materiality wala point. Okay na? And makes sense, correct? For 10,000 computers, if you start doing that ROU and blah 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 and all, looks way too hectic accounting, yes or no? Hence, they've given this recognition exemption. So these, maybe you can say, these are or maybe 5 points with respect to LVA. Can we repeat that 5 points again? Yeah. One, it can become an LVA only when you can use on its own or with existing resources. Second, not highly interrelated or interdependent. Okay, third one, you should not use sublease. And they've given examples of LVA, that is office computer, desktop, mobile phone, small furniture, printer, etc. etc. The main feature of bringing in LVA is to capture those items which are high in number but low in value. They've given here high in volume but low in value. Fine. So this is the exemption given basically to capture that. So if you conclude that it is LVA, again you can use recognition exemption and do what? LSC can account it on a simple terms, meaning lease rental paid, he'll treat it as an expense on a straight line basis or any other systematic basis, but practically we'll be using the straight line basis only.
Even if this 10,000 mobile phone is one contract, we can see on one-on-one basis.
Come again, sir? Yeah. This is on one contract only. This is one contract. You have entered one contract to buy or to lease 10,000 computers at 10,000 rupees per computer. Therefore, one contract ka value is 10 crore. This is one only. So LVA exemption, I'm saying, don't look at it as a contract as a whole. Within the contract, if you have many assets, you can go asset wise and figure out whether it is LVA or not. Because if you figure it out at contract value, it can never be an LVA. Like I assume that this company has only turnover of 50 crore, no? For a 50 crore company, 10 lakh worth of a particular contract is a huge one. Yes or no? So you can go asset by asset classification. You don't have to look at the one contract value as such. You can go even further. Easy na? Yes, sir. So far we've only seen recognition exemption, sir. Now we will come to the important point. What is a lease? What is a lease? Lease we already know. I already given you, correct? You just have to tell the actual definition. Because when they give you a case study, you can't say lessor, lessee, bill, blah, blah, blah. You have to give a definition, okay? So now we'll look at the lease ka definition. If possible, try to remember it, please. It'll be better. Listen to me what I'm saying. Lease is a contract or a part of the contract which has 4 characteristics. Lease is a contract or part of the contract which has 4 characteristics. 1, right to control. Or RTC, right to control, the use of an identifiable or identified assets. RTC, identified asset. For a certain duration known as a lease term, for a consideration known as the lease payment. So 4 features: RTC, identified asset, lease term, lease payment. If 4 are there, or rather all the 4 are there, then only it can become a lease. Fine. So that means now structurally we'll structure it. Lease is a contract or part of the contract that conveys right to control the use of an identifiable asset for a certain duration, that is known as lease term, in return for a consideration, that is known as lease payment. That's all it is. Ideally, if possible, remember this. It'll be great. Lease is a contract. Once again, we'll repeat so that we can learn it off here on the class itself. Lease is a contract or a part of the contract. Which conveys the right to control. This is, we call it as RTC. Okay. The right to control the use of an identifiable assets or identified assets, which we will call it as IA, for a certain duration. That duration for a certain period of time, which we call it as LT, lease term. In return, lessee has to pay some consideration to the lessor. In return for a consideration, that we call it as lease rental. That means, simply put, lease is a contract or a part of contract. Lease is a contract or part of contract that has 4 features. First is right to control, RTC. Right to control what, sir? What is the correct? No, that name makes sense, no? Lessee has a right to control through the lease. He doesn't get the ownership rights. He only gets the right to control, right to use it. That right to use, we're calling it as RTC. That is right to control we are using. Right to control what, sir? The use of identifiable asset. How to use that identifiable asset? For that, he has a control. Yes or no? In return, what he has to, and this right to control, he'll get it forever or a certain duration. For an agreed time period. That we call it as lease term. And in return, he has to pay something. That we call it as lease rental or lease payment, we will say. LP will use. So if these 4 features are there, then you will call as a lease. Otherwise, it can't be a lease. Last 2 will generally be there, sir. Identifying the first 2 is the crux of the lease. Last two generally will be given. First two is something you have to figure out. Because first two, if it is not there, if either and, okay, all are and. If any of the feature is missing, it can't be a lease. It will be something else. Maybe it will be a revenue contract, a supply arrangement, but it will not become a lease. For it to be a lease, it has to be these features. Fine? Any doubt with you? Sir, why part of the contract they've used, sir? What will happen is sometimes lease, no, they'll club it with non-lease components also. Like you took a building on lease. You took a building on lease from the lessor. Fair enough. For 5 years. Lessee told the lessor, boss, you only do the maintenance now for 5 years. I don't have staff. Or simple example, we took a car on lease for 5 years. Lessee took a car on lease from the lessor for 5 years. Lessor asked, do you have a driver or do you know how to drive? No, I'm looking to hire a driver. Lessor told, I have a driver. Do you want to take? Lessee told, it'll be great. Please send a driver also. I mean, you're taking a car as well as car driver service you're utilizing. Correct? Service can't be a lease because for you to be a lease, it has to be an asset, no? For service contract, you don't get any asset. Correct? So that means here what? Here the contract is what? To take both car as well as car driver on lease? Yes, no. On car driver, is it an asset, sir? Is car driver an asset for you, sir? No. Hence what? You're taking a service. That becomes your non-lease component. Fine? That means your whole contract is leased now or only part of the contract has leased down? Only which part? The part where you're taking the car on rent. That only becomes your lease. Correct or no? Hence they've used lease is a contract or part of the contract which has these 4 features. Manageable. That's all. This is what you have to write in examination if it comes. Done? You want to read it for once and ask me any doubt or I can move on? No, move on. Okay. Next, we have something known as inception date. Something known as inception date. Inception date means?
Date on which lease starts.
Date on which the lease starts. Correct. So that means, can I say lease inception date is agreement date?
No.
Can I say lease, lease agreement date is an inception? Inception means starting. Correct. So agreement will start. Can't I say it's an agreement date?
Agreement can start today, but I can
sorry.
Control after like some time also.
So you're getting confused or something known as, there is a difference between inception date and commencement date. That what you're thinking, no, is a commencement date. I'm not talking about accounting. I'm talking about when lease came into picture. That is inception date. When did the lease contract come into picture is inception date. Lease inception date means when the lease contract was, lease contract began, when it gave birth. Okay. When does lease contract become alive, sir? On the agreement date. In the date on which you have entered into an agreement. So lease inception date is earlier of the two of the things. One is agreement date. Lease inception, which we'll call it as LI. For now, just time being, I'm going to use the short forms. Okay. Lease inception means it is earlier of the two following. You don't have to write. It's there anyways. Earlier of two dates. One is agreement date, or on the date on which principal terms are agreed. Date on which principal terms are agreed. Date on which principal terms are agreed by parties. Are agreed by lessor and lessee, you could say. Lease inception date is nothing but it's earlier of either agreement date or date on which the principal terms are agreed by lessor and lessee. Okay. Principal terms mean for a lease contract. What is principal term, sir? Principal term, the main term. What is the main term in a lease? Lessor has to give the asset, has to transfer the possession of the asset to lessee. Meaning lessee should get RTC, right to control. Correct? And lessor should get lease payments. Those are principal terms. The day on which that principal terms are agreed upon, that becomes your lease inception date. Can they be? Normally that will be agreement date only. No? Normally yes. Sometimes what happens is, let's say agreement date is 1st February 2020. Okay. Fair enough. But they agreed, lessee transferred the asset to the lessor on 1st January 2020 itself. Fair enough. Because lessee told, I have some modification to make. I have to do some alterations. Fair enough. Fair enough? We'll get into an agreement on 1st February. For the time being, you give me the asset. I'll start the modification. And also, I'll start paying you the lease rentals. And from which date is the asset transferred? Lessor transferred the right to control the asset on 1st January. And lessee started paying the lease rental from 1st January. Correct? So here, but agreement date is on 1st February. Possible? So here, lease inception date will be what? 1st February or 1st January, whichever is earlier, which in this case will be 1st January. Okay, now very hypothetical, but very rare scenario, but it could be the case. Hence, earlier of two things. Manageable or any confusion?
What if my agreement date is on 1st January? Then I say I have some modification, but I'll only start paying your rent only after 2 months.
We'll have to see what that is then. We'll have to see. Let's put that question on hold. You also have to know something known as lease commencement. Enough? We'll see that. Okay, just hold on to because we have a concept of lease modification also. Know that also. Then rephrase all your question. Maybe you'll fine tune that question or polish that question and ask me in a different way. If at all it stays, it might be sorted. If it still stays, like an ask. Fair enough? Just wait for another 1 hour, maybe 1 or 2 hours maybe. Because even that lease modification will come somewhere. Know that and then ask. Put it on, write it. If you want, write it somewhere and keep it. I believe it should be sorted in some time. Okay now? Hence I'm not answering now. Fine, no? Is it okay if I put it on hold? Tala hakpidla nim question ge? Okay. Munduku hogana? Alright. Again, this is a concept where this is a topic where quite a few concepts will come, sir. You'll have to remember. Ideally, I would say remember the keywords. Because that is where you'll get marks. If it comes as, there's a possibility that even this topic has a possibility to come for either 2 or 3 marks. Or up to 16 marks also there is a possibility. 16 marks may be a little doubtful, but there are questions that could be asked up to that range also. So it has a broad range of questions. Okay. So if it's a concept driven question, ideally the keywords are very, very important. Enough? It takes a little time. Hence, I'll also give you constant recaps. So let's learn everything in the class itself. Let's not push anything to home. Fine now? So lease inception date means earlier of two things. One, the agreement date or the date on which principal terms are agreed by lessor and lessee. Whichever is earlier. Okay. Next. Can we go for next question? Question number 2. Any doubt? Yeah? It's bit 2. Alright. Sir, I told lease means it's a contract or a part of the contract which conveys 4 things. What are those? Which conveys what? What are the 4 things? Right to control. Right to control what? The use of an identified asset for a certain duration in return for a consideration. Correct? For LP. Correct? For a certain duration known as lease term in return for a payment known as lease rental. LR. Correct?
Yeah.
So this question is based on the second feature of a lease. Second feature of lease is what, sir? Identified asset. So this question is based on that. Let's identify. We also have a separate concept of that. First, let's do of this question maybe. XYZ, customer XYZ enters into a 10-year contract with supplier ABC for use of a rolling stock specifically designed for customer XYZ. So it's not a regular one. It's specifically designed, correct? And box, just underline that. Specifically designed. So can I say it's customized?
Yeah.
If it is customized, means more or less only this customer would be able to use it.
Correct.
Okay, let's see. The rolling stock is designed to transport the material used in XYZ ka production process. You know, normally in big factories, you will see that they'll stack the product like this vertically. Correct? Like they'll have like almost 20 feet, 30 feet high, they will stack the product or they will store the product. When you have to use all these materials and all, they'll also store like that, correct? But when you have to use the material, what do you have to do? A person, if he starts climbing and taking out, it will be heavy. A machine will do it better, correct? So you'll have a machine, correct? That machine, you remember that? It extends like this. It goes like this, picks up the material, takes it back and do it, correct? That machine, that we're calling it as a rolling stock. Why not? A machine used to stack the products, be it raw materials or finished goods, doesn't matter. Okay? So we are using that. A customer has entered into a contract to supply that, sir. And he did not buy it. It's a contract to use of rolling stock. I mean, use of rolling stock means what, sir? It's a lease. So it's a lease of rolling stock, can I say?
Yeah.
Okay. But you can't say lease yet because lease means it has 4 features.
Yeah.
So that means for now we'll stick to use of rolling stock only, correct? Okay, that rolling stock is used to designed to transport material in XYZ production process and is not suitable for use by any other customer. That we got to know because it was customized, no?
Yeah.
The rolling stock is not explicitly specified in the contract. They've entered a contract, but nowhere they mentioned that this rolling stock, like this, they have not mentioned anything. They just entered rolling stock. Fine. So rolling stock is not explicitly specified in the contract, but supplier ABC owns only one rolling stock that is suitable for XYZ's use. If the rolling stock does not operate properly, contract requires supplier ABC to repair or replace the rolling stock. Whether this is an identifiable asset or identified asset. Identified asset means rolling stock.
No.
They are asking you whether this rolling stock, a machinery, is an identified asset or not. Because it is not called out in the contract. It was not mentioned in the contract, they're saying. And this is customized also, they're saying. Because look at the importance of this. If it is not an identified asset, it fails the feature of lease. That means lease ka accounting you cannot do it at all. Maybe you have to apply revenue recognition ka principle. Or it will be a pure supply arrangement. Do it that way. You can't apply Ind AS 116 at all. That is the importance. You have to tell me whether it's an identified asset or not.
Why not it is identifiable? It is identifiable.
It is identified asset. On what grounds?
So it is a specific asset and you can specifically demarcate it.
Just because this asset is not mentioned in the contract does not make it as not identifiable. Fair enough. Here, it need not be mentioned. Why it need not be mentioned? What are they saying that it is not mentioned is, see, this customer, what does he do? The supplier, what does he do? He will supply rolling stocks, correct? He'll supply this machinery. That is his job, correct? Whoever wants it, he will supply. Either you can buy it from him or you can take it on lease from him. Maybe that is what his line of business is. Fine? That means he'll have hundreds and thousands of rolling stock.
Yeah.
So this one, like that, they have not called under the contract. This blue color rolling stock, which has 14 feet, okay, this has that color ka steering wheel or that what wire, nothing like that has been called out. That is not mentioned in the contract. It need not be because it is a customized rolling stock and the supplier has only one such rolling stock which customer can take. Yes or no? That means this is implied already. Hence, it is an identifiable asset. Got it? Yes, getting the importance. Suppose it was not customized. Suppose it was not customized. It is like a regular rolling stock. Fair enough? And we told, supply anything to us. Then you'll have to just check. There is a separate concept known as substantial substitution right. We'll have to check that concept and accordingly conclude whether it is a lease or not. For the time being, let's leave that out. No, if that doubt is there in your mind, put it on hold. Once we do SSR, I think that doubt will be sorted. You might have that doubt. Fair enough. For the time being, put it on hold because I don't want to touch that for the time being. It'll come in the next 15-20 minutes. Fine now.
Okay.
So what is the funda we learned here? That an asset need not be specifically called out here. Though asset is not specifically called out because you have not mentioned about rolling stock in the contract.
Yeah.
But still it is identified. How? Sir, because it is a customized asset. Fair enough, whether you call out or not, customer can only take one such rolling stock from the supplier. Correct? And supplier has only one customized rolling stock with him. Hence, it is an identifiable asset. Artha aita ilva?
Yes, sir.
That's what they're saying here. See, though rolling stock is not explicitly specified in the contract by serial number, there's another way. Because each stock will have a serial number, no? You have not mentioned the serial number in the contract, but you need not. Why? Because this rolling stock is completely different from the other rolling stock the supplier has. Because this is customized. On that ground, this is a identified asset.
Yeah.
Yes, hence you need not specify it. Even if you specify, it's good only. Even if you don't specify, still it is an identified asset.
Yeah.
That means what? RTC is also satisfied, identified asset is also satisfied. Then lease term also generally will be there and payment also will generally be there. That means this contract you could say has a lease. That they did not ask. They only talked about identified asset. So it is an identified asset. Got it up?
Yes, sir.
Can I move on to the next question?
So, but if it is not, I mean, if the same question comes without that customized, so
There is a next concept known as identified asset also. Actually, three concepts will come. Okay, identified assets, RTC, SSR, supplier substitution or substantive substitution rights. Fair enough. So whatever doubts that are running in your mind, most probably will be covered under those. Will be getting covered under those. We'll see when we can call it as identified asset. This question came following the order of study material I told you. Hence this question came before I'm doing it. Next concept only. See here only SSR came. SSR will come all here and substantive substitution rights. And identified assets RTC is the next concept on. And we have more cases on that. Or maybe ask what is your doubt. If it is related to that, I'll put it on hold. Or if it's something else, I'll answer now only. What is your doubt?
No, if the asset was not having any serial number mentioned in the contract and it was not customized.
That's what. Then in that case, you'll have to check this SSR. If serial number is also not mentioned, fair enough. And it is not customized, meaning it's your regular. There are thousands of rolling stock, and it is one among that thousands of rolling stock which we are taking on lease. Lessee is taking on lease. In that case, it is identified or not. You'll have to check this criteria specifically. Based on this, we will conclude whether it is an identified asset or not. Fair enough? So I'll put it on hold. It's related to this, hence. Fine now? I know, understand. In half an hour you wait. Everything will be falling patapat. Few basics. After half an hour, 45 minutes, these sort of questions will be sorted in your mind. Because if I keep jumping, even this concept will be it'll be distorted. I'll put it on hold, that one. Next, question number 3. XYZ enters into a 10-year contract with a supplier ABC for use of a car. Again, sir, we are not buying a car. It's a contract to use a car. That means lease ka characteristic. I'll not call lease so far, because for lease it has to be RTC, IA and all should be identified. No. Yeah. So it's a lease feature, I will say. The specification, check this, it is important. The specification of the car is specified in the contract, like which brand, which type, which color, which option, etc. etc. All that has been mentioned. The specification of the car is mentioned in the contract. Next word is also important. At the inception of the contract, car is not yet built. Whether it is an identified asset. We're not talking about lease. Don't think about the lease here. They are only restricted their answer whether it is an identified asset. Identified asset means, like you said, it should be like specified. You should be able to find out that this asset I've taken on lease. Fair enough. That is what we mean by identified asset. Extra, we'll spend more time on identified asset in a bit. So just to give you a little background, identified asset means you should be able to identify that asset. Meaning you should be able to print out, this is the asset that I'm taking on lease. Fine. That is the fund of identified asset. Okay. Here the car is not yet built. But brand, type, color, every specification is called out in the contract. Meaning they will build it first. The supplier will make that car according to the brand, type, color specified by the customer. And then he will give it to lease on the customer. You tell. Identified asset
will be identifiable because every specification is already
perfect. Identified asset does not mean it should be physically present, or like in last problem, it should be called out in or specified in the contract. Even those assets which are not in existence for the time being on the contract day can also be identified. On what grounds? Because clearly you have called out the specification. Yes or no?
Yeah.
Even since you have clearly called out which type you require, which accessory you require, everything has been called out.
Yeah.
Let's say here the customer told, I need alloy wheels. I need JBL ka speakers. I need leather covers. Fair enough. So I need like sunroof. Like this, he has called out 100 features. If that feature is not there, will he accept that asset, sir?
No.
How will he find out? Why will he reject? By comparing the features with the car that is there. Yes or no? That means in a way you can easily identify with these features. Correct? That car meets my criteria or not?
Yeah.
So that way it becomes an identifiable asset. Got it? Yeah. Hence car is said to be identified asset. So on what grounds? Because the features are implicitly called out in the contract.
Yeah.
I know. Sir, whether it becomes a lease or not, lease means 4 features, sir. Not just one. Here only one feature is getting satisfied. What is one feature? Identified assets. Fair enough. Second feature is also there, right to control.
Yeah.
So for the time being, now let's not talk about lease. Okay. Is this
so your serial number doesn't matter?
The serial number generally you will give it for car, no sir. The car only is not in existence. Normally that car will have that chassis number. We will not call it as serial number. Car will have that chassis number. Correct? So but that will be based on car and car, no? Or if any organization have their own serial numbers for the car, internal purpose. Because since car is not built, not necessary. Fair enough. But based on features, you can clearly identify that this is the car I wanted. Yes or no? So that features acts as identification for you. So that means what is the point we learned from question number 2 and 3? 1. Even if you don't call out that asset in the contract, still it can be identifiable. If asset is not there at the time of contract date, still it can be identifiable provided features have been clearly mentioned. Fair enough? Those are the 2 pointers of question number 2 and 3. If you want to put it in words. Yes, sir.
Yeah.
Alright. Next, the most important concept is supplier's substantive substitution rights. SSR. Or you can call it as triple SR. Supplier's substantive substitution rights. Either you can call it as SSR or triple SR. What do you want to call it? Triple SR. Okay. Triple SR then. Triple SR andre then you will call it as suppliers. Substantive substitution rights. That is called out here. Why am I calling you this? Is write down this point. If supplier has SSR. SSR means substantive substitution rights. Then customer does not have RTC of identified asset. Therefore, no lease. Just write this one point. Or if you want to tell even in further way, if supplier has SSR, sir, copying. If supplier has SSR, it is not a lease. If simple terms, if supplier has SSR, then it is not a lease. This is a funda. Yes, got the funda? Can we know the meaning of it now? What is SSR now? SSR means substantive substitution rights. Correct? No? Now, I'll just give you a simple example before that. Then we'll look at the definition. Okay?
What is the
That's what I'm explaining that through an example. Then we look at the definition of it. When will supplier have SSR? Or when will that triple SR come in? That only I'm trying to tell you with an example. Sir, A Limited, they approached B Limited, sir, and told, I require a car for lease, car for use. They want to use a car. They don't want to buy a car. They want to use a car for 3 years. Okay? Any confusion? So A Limited approached B Limited and told, he is probably the car supplier or something. A Limited approached B and told, I required to use a car for about 3 years. Fine. B Limited asked, which car? Hey, fair enough. Any SUV you send, it's okay. Okay. A Limited is not very specific. You told any SUV you send, no problem. Fine now. So, that means, can I say A Limited is lessee here? In a way, for the time being. And B Limited is supplying. So, can I call him as a lessor for the time being? So, there is a contract. First week, B Limited sent Innova. Black color. Black color Innova he sent. First week. Because he has to supply car for 3 years, no sir. First week he sent Innova black color. Normally what is the arrangement is, B Limited will send the car. Let's say it reaches A Limited ka premises on 7 AM. Fair enough? 7 PM the service will be over. After service is over, whole day is over, it will come back. B's driver or B's person will get back to B's garage. We'll get the car back to B's garage and it will come. Next day same activity. Take the car to A's premises, serve him. Again come back and store the product in B's garage. This is the process. Okay. First week Innova black color car we sent, sir. Next we sent Innova only. But we sent the silver color. Customer did not say anything. A Limited. They're like, okay, fine, same only now. Yeah. Next, let's say we sent brown color Innova. Third week. Fair enough. This happened for 2 weeks. Fourth week, we sent Mahindra XUV. Okay. Fifth week, we did a blunder. We sent Omni. Customer got really furious. I was adjusting. Okay. Just because I asked SUV, you sent me Omni. What do you think? I'm a kidnapper? He got really furious. Okay. So A Limited approached B Limited. What nonsense are you saying? B Limited simply told, sir, you asked me to send an SUV. I thought SUV is a 7-seater one. Yeah. Omni has a 7-seater. Okay. And moreover, these two cars, no, sir, all this have gone to other customers, sir. So this is the only car I had. So hence I sent it, sir. Is it okay? Now tell me whether it is a lease, sir.
Now it is
Got the example. Tell me whether it is a lease. So initially we called A as a lessee. Initially we called B Limited as a lessor because B Limited is supplying car to A Limited.
Yeah.
So A Limited is using that car. Hence on that terminology, for the time being, we designated him as lessee. Fair enough? Now we have to conclude whether this is a lease and in A Limited and B Limited are really in fact lessee and lessors. Tell me.
He had to send, but then he didn't send. I think it's a confirmation of the lease.
Sorry, sir?
He had to send and he didn't send the right car. So I think it's a contravention of a valid lease.
Okay, fine. Okay, fine. Fair enough. Leave. Okay, if you feel Omni is hurting you, he did not send Omni. He was kept on changing between Innova, XUV, Creta. He kept on changing between these three. Okay. If Omni is hurting your feelings, means let's say Creta.
Okay.
He's dabbling or changing between these three cars. Every week, one car he'll send. Fair enough. And different colors.
Then identifiability will be
perfect. It can't be a lease because A Limited can't identify which asset is it. Daily is getting one car. Correct? No. Hence, identifiability criteria will get failed there. Fair enough. Why? Why is that asset not identifiable? Because B Limited, is he sending the same asset or he's substituting the asset? Why is it not identifiable, sir? Because B Limited is substituting the asset. That we call it as substantive substitution rights. Got it? Understood the meaning or once more? Understood the meaning or Tripti toss? Understood. So if supplier is going on substituting the asset means, can lessee identify the asset, sir? He can or he can't? He can't identify. If he can't even identify the assets, where is the control? That is what we wrote here. If supplier has SSR, then customer will not have right to control the use of an identifiable asset. If customer does not have RTC and IA, these are the two main pillars of lease, no? Therefore, it will not be a lease. Understood? Now, it's a simple thing, but given in a fancy way. Or okay. Omni, example, yeah, fine. Okay, so you can say, now, normally this will not be evident in all the contracts. Fair enough. You have to find out whether supplier has SSR. To find out whether supplier means B Limited here. Here the two terms will come, sir. Lessor and lessee. Lessor is also sometimes referred to as supplier. Fair enough. So you could say supplier, that is lessor, has SSR. SSR means substantive substitution rights. If supplier has SSR, if two conditions are satisfied. You'll check two conditions. If both the conditions are satisfied, means you conclude that supplier has SSR. And since a supplier has SSR, customer will not have RTC of identified asset. Hence, it will not be a lease. That means, can we look at what are those two conditions?
Yeah.
Those two conditions are called out here. Supplier has a practical ability to substitute the asset throughout the period of use. Underline the word practical ability to substitute. Underline the word throughout the period of use. Supplier has a practical ability to substitute the asset and throughout the period of use, and supplier would benefit economically by exercising its right. That means what? In this contract, A Limited only told what? Give me a SUV car. That means B Limited can send any SUV car. It doesn't matter because he'll be still honoring the terms of the contract. Yes?
Yeah.
Okay, now just check. I'll modify this example. A Limited approached B Limited and told, give me an SUV car. Fair enough? Yes, no, sir?
Yes, sir.
For, let's say, 1 year. So 1 year means short-term lease. No, sir, short-term lease is an option. Fair enough. It's not necessary. Though it's a short-term lease, should you have to do that recognition exemption, or you can do normal accounting also? Normal accounting also. So for that specifically, I'm just taking 1 year as an example. Fine now? Okay. Now just modifying this example. B Limited has only two SUV cars, sir. He has one Innova and he has one XUV. Only two SUV cars he has. Rest everything is like other cars. Sedan or hatchback cars he has. He has only two SUV cars, let's assume. Okay? Now you just check. XUV Mahindra, no? He's already sent it. Let's say this B Limited is there in Bangalore, okay? This B Limited, this XUV car, no? He sent it to another customer. He's there in, let's say, Mumbai. Or maybe, realistic one. Let's say I sent it to a customer. He is in Chennai. This XUV, he has leased it to a customer. He is in Chennai. Now you tell me, B Limited will give what car to A Limited? Innova. Correct? Because that's the only car available with him. But A Limited, did he say I want Innova only? Or he just said give me an SUV car? Does it mean B Limited has SSR here? You just check. See, if B Limited gives, instead of first week, let's say he sent Innova. Second week he sent XUV. Will A Limited be furious or he'll be okay with it? He'll be okay with it because his requirement was SUV. Both are SUV only. Correct? Now you just have to check in this circumstance, does B Limited have SSR? Does B Limited have SSR, sir? To check SSR, I said you require two requirements. What are the two requirements? You should have the practical ability to substitute. Correct? No? That is the first thing. Practical ability to substitute. Yes, that's what you wrote. And throughout the period of use. Yes? So you just check here. So does B Limited have the practical ability to substitute, sir? This car is already given to Chennai customer and A Limited is there in Bangalore. If he has to substitute, means this XUV has to come from Chennai to Bangalore. Correct? And this Innova which A has to be sent from Bangalore to Chennai. What is this? Like, Chipmukal drawing, like this, they'll keep on doing the round trips. Yes, does he have the practical ability here? He may have a practical ability, but second point is that what? Whether it is economically beneficial. In this contract, if he substitute this, is it beneficial for him? You just check. Every week he's substituting. Will it be beneficial? Will B Limited do the substitution or he'll keep it as it is?
He'll keep it as it is.
That means though practical ability to substitute is there, whether he'll get any benefit by substituting? Probably not. Correct? No. Because from Chennai he has to transport, send this, get this goods to Bangalore, and Bangalore wala car should go to Chennai. Correct? If he has to do this every week, means obviously cost will go up, na sir. For him it's a loss, yes or no? So both the criteria has to be satisfied for you to say that supplier has SSR. In this criteria, both is satisfied or one is getting failed? One is getting failed. He may have the ability, but is it beneficial for him to do the substitution? No. Hence, what will you conclude here? The car is identifiable. Though this Innova, A Limited got only Innova. He didn't ask for Innova, but he got Innova. Correct? But this Innova will be treated as an identified assets in the books of A, and lease ka drama will continue. Artha aita Tirupati Tasa. Understood. Okay, let me modify this example one more to see whether you have really got it. Okay, same drama. A Limited said, give me an SUV to B Limited. B Limited, has about 10 different SUV cars with him now. 10 different SUV cars. All of them are in Bangalore. And this customer A is also there in Bangalore. Now he may substitute. He'll just check which car is closest. Correct? First week, let's say Innova was closest to A ka factory. To save on the petrol charges, he sent Innova to A. Correct? Next week, Innova has gone somewhere else. But Mahindra XUV is close to A factory. Now what he'll do? He will send XUV to A ka factory or A ka premise. Why? Because XUV is close enough. He'll be more beneficial for him to send XUV this time around. Correct? That means easily he'll do the rotation now. Correct? Yes or no? That means now it will be what? He has a practical ability to substitute also. And by substituting it will be beneficial for him also because cost will be lesser. That means now you will say what? Since supplier has SSR, A Limited cannot have identified assets, meaning he cannot have a right to control identified assets. If those two features are missing, means it can't be a lease. It will be a pure supply arrangement. Don't apply lease car treatment. Fair enough, whatever lease rent you're paying, book it as an expense. Don't do lease car drama. Other normal accounting you do. That is the significance of this. Do we understand the drama? Illa confusion create aita. So it is a case to case basis. There is no thumb rule here. You have to analyze it case to case basis. Fair enough. In one case, supplier may have SSR. In another case, he may not have. Like that. Maybe first year he may not have SSR. Second year he may have. Like this. It differs from year to year, case to case, lease to lease. It may vary. Finally, you'll have to check on those and conclude. Okay?
If the lessor has SSR, then
lessor has SSR means we already wrote the point. If lessor, simple thing, sir. If lessor has SSR means he'll go on substituting the asset. I mean, let's see. Can he identify the asset, sir? For him, identifiability will be a problem. Yes or no? Because this week he's getting this car. Next week he's getting some other car. Next week, God knows what car he'll get. Correct? No? That means asset itself is changing every year. Means how will you have the control of that asset? Correct? No? Only when you control a particular asset for a certain period of time, you can call it as what? A lease arrangement. Correct? Your asset itself is changing means your RTC will be what? Lessee will not have what? RTC of identifiable assets. Hence, it will not be treated as lease. It will be a pure supply arrangement. So, whatever rental which A is paying to B in these particular cases will be booked as an expense. Fair enough? So, that is the thing. Okay. Damara.
So, what if the contract says he can only get, let's say, one type of car, let's say Innova only?
We'll see. We have many cases. if the contract says, if A Limited clearly told, I want Innova, okay, I want black color Innova, that Innova should have a sunroof, it should have a leather seat cover, and it should have a leather seat cover which is black in color, it should have an alloy wheels. Like this, if he tells means, that means what? B Limited should send that car only.
Yeah, that is
then it is
what if he just says Innova, sir?
What if he just says Innova? And you'll have to look at the case.
Black, white and all that.
Like if he doesn't mention the color, if he just says Innova, you'll have to just check. It may not be identifiable, but you'll have to check that. Like, suppliers per se, you have to check. Fair enough?
Yeah,
How many Innovas he has, you have to check.
Different.
How many Innovas does the supplier have?
He has many.
He has many Innovas. Does all the Innova occupied or not occupied? You'll have to check the facts of the case.
He's sending different,
that's what. If he feels by sending different Innovas to different customer, it will benefit him. Like that's what he did here also, no? In my example, I took Innova and XUV. You are substituting Innova only, correct? No. He's sending different Innovas to different customers. Fair enough? That means he's substituting the asset.
Yeah.
And it is beneficial for him to substitute.
So he'll only substitute if it is beneficial.
That's what. If he is doing means supplier has SSR. You can't say this is a lease arrangement. It becomes your supply arrangement. Don't apply lease ka funda. If you want to apply lease, that 4 features compulsorily have to be satisfied. And first feature is identifiability, or right to control the identified asset. Here you can't control any identified assets. Identified asset means clearly you should be able to tell what you got on lease. Correct? Here it is in general in nature. You can't. Hence it will not be a lease arrangement. So case to case basis it will vary. You can't have one answer. We can only give a broad guidelines. You can say B has SSR provided 2 criteria are satisfied. 1, he should have the ability. Fair enough. And 2, it is beneficial for him to substitute. First, ability to substitute, beneficial for him to substitute. Both are satisfied under supplier has SSR. And we already wrote, if supplier has SSR, then customer does not have the right to control the identifiable asset. Hence, it will not be a lease. Manageable. Confusion create aita or okay idea? Okay, can I bring in one more pointer?
Okay.
Supplier does not have SSR, let's assume. Meaning he sent only Innova. He had only one Innova car which he sent it to A Limited. A Limited asked, I need Innova. B Limited has only one Innova car which is sent it to A Limited. Fine? Contract says, if the car breaks down, you have to send me another car. If the contract, because the contract term was, let's say, maybe I'll write it down. A Limited, B Limited, supply me Innova. Okay, Innova car. For let's say 2 years. Okay, this is the arrangement. Fine. And B Limited has only one Innova car. Hence what? He can't substitute. Yes or no? Because if he substitute, A Limited will get very furious. Because he asked for Innova. You can't send any other car. And B has only one Innova means he can't substitute it. So B has no SSR in that case. But A Limited also told, if by chance car breaks down, fair enough, then you have to replace it. Can that replacement option be considered as supplier's SSR?
No, sir.
Let's say car broke down after 1.5 years. Okay. Fair enough. For the first year, B Limited did not have any Innova. When we entered into contract, he had only one Innova. Car broke down after 1.5 years. Within that 1.5 year, B purchased one more Innova. That means he has 2 Innovas now. Fine now. One he has already given to A. Another one he is given, he is using it. Because he doesn't believe in substitution. Because it is not beneficial for him, he feels. Correct? A Limited is there in one corner. Bangalore only one corner, substitution will not be beneficial for him. So he doesn't want to substitute. But it broke down. Hence, he sent a different Innova to A Limited. Now can we say B Limited has SSR?
Yeah.
No. B Limited still does not have SSR. So replacing the asset, provided certain conditions get triggered, like after a particular date or on occurrence of a specified event, does not mean supplier has SSR. Meaning here what occurred? Here one event occurred. What event occurred here? Vehicle broke down. That means only if the vehicle break down, like he's substituting. Yes or no? Or let's say A Limited told, first year you send me one Innova. Okay. Second year you send me another Innova. Fair enough, because that car has run for enough number of kilometers. Fair enough? Or A Limited clearly told, send me an Innova. Fair enough. If first year, if I use it for 10,000 kilometers, then send me another Innova for the second year service. Because it has run enough, no? Fair enough? I don't want to use the same car. Send me another Innova because it has crossed 10,000 kilometers. Now, can you say B Limited has SSR, sir? No, because only after a particular period of time he's substituting. Remember the first condition? What does SSR means? What are the two conditions? You must have the ability to substitute, not just on a particular date, throughout the period of use, we said. Throughout the 2 years, you should have the substitution rights. And throughout the 2 years, it must be beneficial for him to substitute. Only then supplier has SSR. So that means in my example, what will be? In both the example, what is it? Supplier won't have SSR. Correct? Therefore, customer will have what? A Limited will have a right to control of identifiable asset. Therefore, what is the conclusion? Therefore, you could say it is a lease arrangement. Drama artha aita? Yes. See, sir, simply I could have just told, just told this and went. Giving you examples, I feel you'll remember it better. That's the intention, not to confuse you or just to waste time or anything. Okay? It is just to make sure that you understand the concepts. Fair enough? With examples, various examples, if you can remember, you can construct the now SSR easily. Now, can you construct and tell me when can you say supplier has SSR? Both the conditions, too. One.
First of all, he should have ability.
He must have the practical ability to substitute. Don't stop there. Ability to substitute throughout the period of lease. Second, it should be beneficial for him to substitute. Fine? So that's what. So these are the examples that kind of target that. Yes? So if you conclude that supplier has SSR, then the customer will not have right to use the right to control a specified asset, hence it will not become a lease. That's it. Can we move on to the next one? Okay. And general thumb rule is that if you can't determine whether supplier has SSR or not, we always assume that supplier does not have it. If you are not able to determine whether the supplier has or not, general assumption is supplier does not have. You can write the general assumption here. General assumption is, on any contract, general assumption is supplier does not have SSR. And you have to prove. If he has SSR, specifically you have to prove. Okay? General assumption is he does not have. General assumption. Prove means that both the conditions should be fulfilled. Ability to substitute throughout the use and beneficial. If you can prove both, then you would say supplier has SSR. Otherwise, generally we take it as supplier does not have it. General.
See how many assets this person has and
case to case basis you'll have to go. Case to case.
Beneficial for him and all, how will we know, sir?
Correct. And that's what you will have to just do a math analysis there. Kind of difficult from lessee's angle. Depends on the contract, sir. It depends on the contract there. Practically, we assume that he does not have SSR into the accounting. There'll be practical limitations because you should have lesser ka intention and all you should know. No, basically his ability. Maybe based on previous, your past contract could be an idea. Like last year also you have taken a car. I asked for one car, he keeps changing the car. Then you can take a call that previous contract he has substituted. Maybe this contract also he will substitute and then take a base like that and do the accounting practically. Theoretically this is okay because they will give you all the data. Practical limitations will be there. You'll have to look at facts of the cases and determine. Hence they have given general rule. Generally assume that supplier does not have it and do the accounting. Unless you can prove that supplier has it, don't assume that he does not have it. Like that. Artha aita? Too much answer idea. No, easy only, no sir. Now we have questions based on SSR. Can we take it? Okay, let's see how well you understood. This will be my check. An electronic data storage provider, supplier, provides services through a centralized data center that involves use of a specified server. So there is a supplier who's giving you what, sir? Server. Maybe customer is saying, I need the server to store my data. The data storage service is providing the supplier. And one specific server, that is server number 10 is given. Okay. That means identified. You may have thousands of servers. In this we have identified server number 10. So that means what, sir? You are able to identify which asset is it, correct? Okay, time being you have identified. Supplier maintains many identical servers in a single accessible location and determines at the inception of the contract that it is permitted to and can easily substitute another server without customer's consent throughout the period of use. There itself answer given. I did not even read further. Yes or no? What answer given?
It is permitted to and easily substitute.
A Limited approached B Limited and told, I need some space, storage space. I have some data. I don't have storage space. Okay. You have to give me some server wherein which I will store my data. B Limited told no problem. Take server number 10. Whatever data you have, you store it in server number 10. But B Limited told A Limited, look boss, okay, I give this data service to many other customers also. Fair enough. If required, right now I put your data under server number 10. If required, without telling you, I can shift the data from 10 to 11. Fair enough. So this is my and why? Because like I believe this will be optimum utilization for me. Why he's doing, that's his call. Okay. So because it is beneficial for him. You need not even consult A Limited in doing so. Now you tell me, sir, whether A has identified assets or B has SSR.
B has SSR.
B has SSR means will A have any identified asset? B will not have identified asset. That means it will not be a lease. Yes or no? For formality, we'll read further. Further, supplier would benefit economically for substituting the alternate asset, because by doing this would allow the supplier to optimize the performance of its network at a nominal cost. So by doing this, he will save the cost. So that means its ability is also there, correct? And throughout the period of practical ability to substitute throughout the period is also there, and it's beneficial also. In addition, supplier has made it very clear that it has negotiated this right of substitution as an important right in the arrangement, and substitution right affects the price of the agreement. So based on this substitution right only, they have decided on the price. Okay. Otherwise, maybe you would have charged higher or lower. That means what are the conclusions, sir? Whether substitution rights are substantive and whether this is an identified assets. Supplier substitution rights are substantive. Therefore, it is not an identified asset. Correct? No? Yes, that is just scenario A ka answer. How will you answer this? Maybe, how will you answer this question, sir?
So we can say that
I'll give you the answer. Just a sample answer I will give you. First you will write maybe write down. Supplier has substantive substitution rights. Supplier has substantive substitution rights. That is SSR if both the following conditions are satisfied. Both the following conditions are satisfied. First condition is supplier has practical ability to substitute the asset throughout the period of lease throughout the period of use, and point number 2, it is beneficial for supplier to exercise substitution rights.
It is and also?
And yes, and both. It is beneficial for the supplier to exercise substitution rights. Or you can simply say it is beneficial for the supplier if he substitute the assets. That way also you can call out. Done? This is the first pointer you will write. Okay. Second point you will write is, in the present case, supplier has SSR as it is specifically mentioned in the contract, or as it is specifically negotiated in the contract, and both the above conditions are also satisfied. And both the above conditions are satisfied. Therefore, they asked whether substantive rights are supplier's rights are substantive. No. Therefore, substitution rights are substantive. Therefore, you can write supplier's substitution rights are substantive and customer does not have, can I say RTC? Maybe the customer does not have right to control, that is RTC, right to control the use of identified asset, right to control the use of identified asset, which in this topic we'll mention as IA. It is not intangible asset, it is identified asset. Okay, now this is what you're supposed to write. Anything you want me to show?
Yes, sir, last point.
Last point, okay. Maybe I'll quickly show off the first few points also, if any of them are copying.
Yes, sir.
Done. Okay, can we go for the next question then? Actually, in fact, this has a second scenario also.
Yeah.
Maybe we'll read that. Assume the same facts as in scenario A, except server number 10 is customized. Ayyo. Why ayyo, sir?
Because it is customized, so it will be identified.
If it is customized means the supplier may not have the practical ability to substitute.
Correct.
If customization means only one customer you have done, to one customer you would have given that. Other customer may not ask the customized server only, no. He may ask for general server. So practical ability to substitute may not be there. And for throughout the period of use. Let's see. And the supplier does not have the practical ability to substitute the customized asset throughout the period of use. There itself they gave the answer. Additionally, it is unclear whether supplier would be benefit economically from sourcing and similar alternate asset. Whether substitution rights are substantive and whether there is an identified assets. Here in this case, what will you say? First, you will call out the same point like this. Supplier has SSR if these two conditions are satisfied. In the present case, what will you write? In the present case,
because it is not practically benefit.
First you have to write in the present case it is a customized asset. Hence, supplier does not have a practical ability to substitute the asset throughout the period of use. Correct?
Yeah.
And it is unclear whether he will benefit by substituting. Therefore, what will you write? Supplier does not have substitution rights, or supplier substitution rights are not substantive. Either way you can write. Yes? Therefore, customer will have what? Customer will have a right to control the use of an identified assets. Correct? No?
Yeah.
Therefore, you can say asset is identified, and you could say lease features are getting satisfied. You could conclude.
Yeah.
Understood the second one, huh?
Yeah.
So should I have to? Can I leave that you can manage that?
Yeah.
Okay. So I'll just write a quick answer. Quick answer is what? Supplier what? Equals to SSR or not equal to SSR?
Not
equal to SSR. Therefore, identifiable asset is equal to yes. Can I say?
Yeah.
SSR is not there, or you can just write SSR is equal to no. Identified asset is equal to yes. That's a simple answer. I know. Okay. Move on to the next one now.
Yeah.
And doubt is yeah.
No,
Okay. Now we come to some gijibiji in your head. When can you say an asset is identified? You can say an asset is identified provided few conditions are satisfied, sir. I know.
Yeah.
Yes.
Yeah.
Same as performance obligation का distinct goods or service वाला condition. When can you say goods or service are distinct? When what are the two conditions for Ind AS 115 ka revenue recognition ka two conditions? Just now we wrote low value asset also had the same condition.
Yeah.
What are the two conditions? One,
if
you can use on its own or by combining with existing resources. Who will use it? Lessee. So you'll write the condition as what? Lessee can use the asset independently on its own or by combining with its existing resources. Two, it is not highly interrelated or interdependent. Actually, hang on. I think I just told missed thing. Okay, one moment. My bad. That is asset ka condition, sir. My bad. Okay, that is RTC ka. I'll just come back. Identified assets means, my bad. You can say an asset is identified provided it is physically distinct. Sorry, my bad. That is RTC ka condition. That is asset ka definition, which I said identified assets. In a way, you can apply it here. But okay, we'll write what the books are saying. Identified assets means what, sir? You can call an asset as identified. If you want to call an asset as identified, means it should be physically distinct, meaning it should be physically separate. If there are 10 assets, if you want to call that 10 assets as identified, means what? All the 10 should be different from each other. Physically distinct. Okay? That is the first thing. Okay?
Yeah.
That physical distinct of the asset can be for the entire asset, or it could be for a portion of the asset. Meaning even one portion of the asset can also be physically distinct, and one portion of the asset could also be an identified asset. Like a building is a perfect example. Let's say you have a building. Let's say building has 4 floors. It's a commercial building. Is it necessary all the 4 floors we have to let it to one customer only? Can you let it out to different customers? Generally, let's say here we let it out to 4 customers. Possible that we can let out like this? Because they have a different entrance, no? So each building, each floor is a separate use.
Yes.
So 4 floors we have let it out to 4 different customers: A Limited, B Limited, C Limited, and D Limited. Building is owned by one company that is known as Z Limited. He is the legal owner. He has let this 4 floors of a building, okay, on a lease to these 4 customers. Yes. So you tell me now, does it have a lease arrangement? Because it is only one asset being used by many. Correct? Can you say that no, it is not a lease? No, because A has a right over first floor entirely.
Yeah.
Correct? If B Limited comes and tells, correct, don't run the first floor after 6 p.m. Will A Limited have to listen to this, or what will he say? Or don't switch on your TV, he's saying. Common problems. Now neighbors do it. Don't switch on the TV after 6 p.m. Should we have to really listen to him, or what will we say? Nammane. Yeah. Nane bekar madkotini. Nannishta. Yes or no? That means what? He can use this portion of the asset separately on its own. Yes. That means even though the asset is one, a portion of the asset can also be a identified asset. Not necessarily identified asset means it should be full asset. Even a portion of the asset can be identified assets. Correct? So in all these 4 cases, there are 4 different leases. Alright? Confusion is there? Okay now. So full asset can be physically distinct, or even a portion of asset can be also physically distinct. Are we okay? Yes? Suppose it was only one asset, sir, but that is let out to multiple users. Like gas line pipes. Normally, if you see, like, the under the seabed, you'll have the gas lines, oil and all being transported. Correct? No, they will not dig 100. If there are 100 companies, they will not. Government will not give permission to dig 100 pipelines, because it will hamper the seabed and all, no, sir. If let's say you're transporting the crude oil from, let's say from India to Sri Lanka, you're transporting the goods. Fair enough. Through the seabed route. Pipeline means you'll dig it under the ground. No. It has to cross country means you'll have to dig it somewhere. Yes. Let's say it's passing through the sea route, because Sri Lanka is in the island region. Correct. There are 3 different companies who are into this line of business. Can they dig their own pipelines and say, tell the government, hey, nangu kodi, nanu agitini, namdu irli? What will the government say? Nothing doing. Okay, one pipeline is already dug. Okay, approach that guy and do your business. Possible? Okay, government did not give A Limited, B Limited, C Limited permission to have their own pipeline. Fair enough. Hence, we approached Z Limited. Z Limited is smart. Okay, earlier he was the only player. He has already dug the pipeline. So that means since A Limited, B Limited, C Limited didn't get permission, they all approached Z Limited and told, hey, look, macha, you have already done all the process. Okay, I will take your gas line on lease. Could you please give me 10% of gas line rights to me. Okay, 90% you use it for your own purpose. Give it to other customers or you use it, no problem. Okay, I need to transport this much barrels of oil. Okay, I think it comes to 10% of your capacity. Let me use 10% of your asset capacity for my business. I will give you lease rental for in that regard. Possible?
Yeah.
Okay. B Limited told I require 70%. Okay, or let's say B Limited told I require 20%. C Limited told I require 40%. Okay, rest is used by Z Limited for its own business. In this case, can you call it as a identified asset? Because one asset, you can't split, only one pipeline is running. That is being used by multiple users. Yes, did you get the, I'm not asking you the answer actually, did you get the scenario? Answer I'll tell you, but did you get the scenario? Yes? So if this is the case, means if there's one asset used by multiple users, then you have to check which guy is using at the maximum capacity. Or substantially, the guy who uses for substantially all of its capacity. Listen to me, then you can just write down. The customer or an entity who uses the asset substantial capacity and who gets asset ka substantial benefit. For that guy it will be a lease. For other guys it will be a substantial arrangement. Meaning, just modifying this example slightly, just to answer the question, okay? A limited is using to the extent of 96%. B limited is using 1% of the asset capacity. C limited for, let's say, another 3% capacity. Z limited is not using. He's not interested in the asset. He's only interested in the income. Hence, he has let out 100% of the capacity of the asset. Okay. 96% he has let out to A. B limited to 1%. C limited to 3% of capacity. What capacity under, you know? Asset ka capacity. Fair enough. Of the asset capacity, A is using 96%. That means he will get substantial benefit. In this case, for A, it will be a lease. A has entered into a lease arrangement with Z limited. For B and C, it will not be a lease. It will be a pure supply arrangement. Purchase sale arrangement. Book it as like that. Artha aita? On what grounds? If there are one asset used by multiple users, first you have to check which company is using the asset or substantial use of asset capacity. Which customer or which entity is using substantial use of asset capacity. First criteria is that. And which company is getting substantially all of assets benefit. The entity who's using the asset at its substantially all of its capacity and is getting more or less all of the assets benefit, for that entity it will be a identified asset, and that entity, for that entity it will be a lease arrangement. For all other customers, which in this case B and C, it will not be a lease arrangement. Got it? Okay, what a substantial benefit has not been called out, but from looking at the illustration given in the problem, I think they are talking about highly probable case. More than 95% you keep as a benchmark. 95% or above. You keep this as 95% or more for solving the case. So that means what, sir? Can you tell me what is this?
That means in our case, A will be the substantial.
So if there are one asset used by multiple users, you have to check which guy is using more than 95% of asset capacity. Fair enough. That guy who is using more than 95% of capacity will generally get substantially all of the asset benefits.
Yeah.
Meaning more than 95% benefits. For that guy, it will be an identified asset. Meaning only for that guy, it will be a lease. For other users, it will not be a lease. It will be a supply arrangement. Purchase and sale wala transaction. Nothing to do with lease. Got it? Yeah. This is what they have called out in your identified assets. 3 points you have to remember from identified asset is concerned. Can you give me a quick recap, then I can move on? Or you're still writing anything?
So if it is all, let's say 33.3.
If it is any, not even 33, if there is anything lesser than that, actually it is not called out. Okay, what is substantial? Looking at institute ka questions, I frame this 95% rule. Fair enough?
Okay.
If it is less than 95, if it generally, if it is anything anywhere lesser than that, take it as he does not have substitution. He's not using the asset at substantial capacity, hence it is not a lease. Because in one of the illustrations you will see further, it is 65%. They've concluded that it is not an IA. It is not an identified assets. Fair enough? So substantial means 95% or more. Looking at their illustration. Okay. Yeah. Actually, there is a reference in Ind AS 37 or AS 29. Highly probable or virtually certain it was there in AS 29, if you remember. Yeah. So you can say something is virtually certain if it is 95% or more. Maybe they are borrowing that line from here and accordingly keeping 95% as a benchmark. Fair enough. But when I went through, I didn't see any percentage being marked out in Ind AS 116. Based on this illustration, I have given you this. Okay? Manageable, huh?
So we have a building.
Sorry?
It has 10 floors.
A building has 10 floors. Okay.
And each floor is owned by, leased out to one guy.
No problem. Sir, building don't apply that. Sir, you'll have to just check. Is it necessary? You have to use first floor and second floor together, or it can be used independently. You'll have to go back to asset ka. So whatever I said also is related. Asset means what, sir? You should have a control over it. Can you control first floor separately, second floor separately, or it is always controlled together?
It's all separately.
It's separately. If it is separately controlled, doesn't matter if it is 10 floors or 15 floors. Each of them will be identified assets. Fair enough. But in pipeline example, only one pipeline is running, no? Correct? Whatever gas or crude oil gets transported, of that 95% of the oil A will take. Correct? 1% B will take, C will take his capacity. Correct? No. So here you don't have any partitions. Another example could be your fiber optic cables and all that runs for your broadband. Correct? Most of the companies, they will not give, if 100 companies are there. Correct? Can 100 companies drag 100 cables, sir? Now it's all fiber optic cables for the faster internet and all, they say. Now every road you'll keep on digging. 100 companies, if they start digging 100 times, imagine what will happen. Your sewage lines and all will get left, right, center broken away. Yes or no? So what do you think government will say? 1 or 2 lines is already going on. Use that and provide. Yes or no? I will not give you so much permission. Possible. They may give permission to everybody, but in some cases they may not give. Possible. That means you have to share. Okay. In sharing scenario, this particular thing will happen. In building example, I don't have to worry about. Building example could be relevant, provided if you say it's a duplex house. The staircase is inside the house. In that case, maybe it's relevant because first floor, second floor. Now, if you have a duplex house, you probably won't let it out to 2 different customers, right? You let it out to 1 customer because staircase is inside. Correct? In that case, what? First floor, second floor has to be used together. Correct. Then what? It will be 1 only. Fair enough. So that case you can ascertain. But in case of office buildings and all, first floor, second floor are now completely different. Yes. So that means that they are distinct assets. Any other doubt is there? No. Okay. So what did we learn from identified assets so far? I understand. New concept. So hence we'll have a recap. We learn it here only. So identified asset means 3 points we learned. What are the 3 points? First, can whole identified asset means it should be physically separate or physically distinct? You're writing something, is it?
Yes.
Okay, finish it off. Okay, so from identified perspective, we can write few points. When can you say asset is identifiable? One, it has to be physically distinct. Yes or no? First point is that. And is it necessary for the whole asset to be physically distinct? Even a part of the asset can be physically distinct. A part of the asset can also be physically distinct. Yes, that's the second point we learned. Building example. Part of asset can also be physically distinct, meaning physically separate. And if there are what? Next point we learned what? If there is one asset and many users, there are one asset and many users. In that case, what will you do? If there are one asset and many users, in that case, what do you do? You check which user is using substantially all of the asset's capacity. Correct? And that guy will generally get substantially all the benefits. For that guy, it will be an identified asset. For others, it will not be. Okay, so you can just write here what? User that is using the asset at for substantial capacity. Substantial means I told you can keep. Substantial means I told 95% or more, sir. The user, the one guy or the entity you can write. If user is problem for you means you can just write entity. The entity that is using the asset for substantial spelling wrong, right? The entity that is using the asset for substantial capacity and what? Getting substantial benefits and getting substantial benefits and getting substantial benefits. That user or that entity, or rather for that entity, it is IA. It is IA means it is identified assets, therefore lease. Therefore, it is lease for that entity. Just wrote it in small, like, matlab, short notes, that's all. Okay, everything is called out. Manageable, huh?
Yeah.
This is with respect to identified assets. In our copy madbeka, if you want me to show anything?
Done, sir.
Done, sir. Okay, so these are the points you'll remember with respect to identified assets.
Yeah.
Can you solve the question and tell me? Can you solve question number 5? That way I'll know how well you understood.
Yeah.
Question number 5. Still writing or can we start?
Yes, sir.
A customer XYZ enters into a 15-year contract with supplier ABC for the right to use, I mean lease features, right to use 5 cables within fiber optic cable between Mumbai and Pune. So 5 cables we told I want to use it. They did not say 5%, 10% all. I want to use it. That means 100% usage. Correct? No? The contract identifies 5 of the cables of the entities. It should be 25 fibers used by customer Z. That means how many cables does the supplier have, sir? How many cables does the supplier have between Mumbai to Pune? He has 25 cables running. Correct? Out of which 5 this customer has said I want to use it. Correct? The 5 cables are dedicated solely to customer XYZ's data for the duration of the contract term. Assume supplier does not have substitution rights. Even if the sentence was not given, what we would say? Supplier does not have SSR, because general rule is supplier does not have SSR. Unless clearly if we can demonstrate that supplier has SSR, we always assume that he does not have. Yes? Identify. Tell me whether it's an identified asset, sir. So go back when in doubt. Identified asset means what? It should be physically distinct.
Yeah.
Clearly it is physically distinct here, no?
Correct.
Because he has 25 cables. In that 5 you have identified and saying this I want to use.
Yeah.
Isn't it physically distinct?
It is.
So that means what? What will you write? Since the cable wires are physically distinct, it is an identified asset. Yes or no?
Yeah.
If it is an identified asset, then you will just check RTC. If you have RTC also, then you will just check lease term. Then you will check lease payment. If all the features are there, then it will become lease. That's all. Last two will generally be there. First two only you need to conclude. Artha aita?
Yeah.
In doubt idya?
No.
No doubt. Easy. Move on.
Yeah.
It's become heavy? Heavy inside, yeah.
No.
Easy now.
Fine.
Fine only. Okay. Next scenario. Customer XYZ enters into a 10-year contract with supplier ABC for the right to transport oil. Underline the word right, sir. Right to transport the oil. That means we are not buying something. We are not buying the asset. We are buying only the right. That means again lease for the features. Right to transport oil from India to Bangladesh through the supplier's ABC wala pipeline. Pipeline means there will be what, sir? An issue. Correct? No, because normally you'll not have cables. You may have maybe 15-20 cables running, but generally gas pipelines and all, you'll not have that many running. Correct? That means there will be only one. That means they maybe have to share with other entities.
Yeah.
Let's see.
Yeah.
The contract provides that the customer XYZ will have the right to use of 95% of pipeline's capacity throughout the term of the arrangement. Tell me whether it's an identified asset.
Substantial.
Yes. First you will call out what? Here there is one pipeline which is used by multiple users. Correct? Yes?
Yeah.
You'll write that provision. If one asset is used by multiple users, then the asset can be identifiable if 2 conditions are satisfied. One is substantial capacity usage and substantial benefits. Yes? Here substantial capacity usage is there.
Yeah.
And substantial usage is there, means substantial benefits also you will only get no.
Yeah.
Therefore it will be what? Therefore it will be what? Identified assets.
Be identified.
This capacity portion of the asset will be treated as identified assets. Got it, huh?
Yeah.
That's the first scenario. Should I have to give the answer or you know it? Malab, you can construct it. Yeah? Construct it. Okay. But why am I not giving every answer? You know the reason. Yeah? Same will not come. No point in mugging up. So sample answers I will give you here and there. Other things, it's okay. Yeah?
Yeah.
So same question has one more scenario. Assume the same facts in scenario A, except that customer XYZ has a right to use only 65% of pipeline's capacity throughout the arrangement. Now whether this is an identified asset.
Not substantial.
So not substantial usage. So that means customer is not using the asset at its substantial capacity.
Yeah.
So means condition number 1 only failed. Therefore what, sir? Therefore what? Therefore not an identified asset. That's all. Yeah. Therefore you will just write here. Not an identified asset. Just underline that. You'll call out the reasons and then those conditions, and then finally conclude whether it is an identified assets or not an identified assets. Manageable.
Yes, sir.
Fine. Okay. If you are in a right frame of mind and if you can just bear for another 15 minutes, I'll do this concept. Otherwise, we'll take a break and resume. Whichever way you feel.
Shall we take a break, sir?
Sure, no problem. Then break means first we'll have a quick recap. We did quite a few, no? Okay. First, we'll not go back to the AS 19 now. We'll start with Ind AS. Correct? First of all, what is a lease?
Lease is a...
You have to tell me with the definition. Lease is a contract or a part of the contract that conveys something or that gives something. What does it give? It gives the lessee the right. It's a contract or right to contract which conveys right to control the use of an identified assets for a certain duration, which we call it as a lease term, in return for a consideration, which we're going to call it as a lease of payment. Correct? No?
Yeah.
Fine. This is your lease. Okay. For lease, generally, lessee has to do. Does lessee have to bother about operating or finance lease?
No.
As far as lessee is concerned, operating finance lease concept has been taken away in Ind AS 116.
Yeah.
Fair enough. The Ind AS 116 of funda is lessee means he will have a right to control for a few years.
Yeah.
That right he can show it as an asset. Hence, lessee always has to show ROU, right of use account, and lease liability because he has an obligation to pay lease liability. So he has to show lease liability. Fine. That means he has to follow lease liability, Ind AS 109 ka amortization, ACM accounting.
Yeah.
ROU ka he'll apply. Initially, he'll use Ind AS 116 and find out its value. Thereafterwards, he'll use what? Ind AS 16, PPE ka fundas. Cost model, revaluation model, depreciation, impairment, all that model again will come here. Yes, that is one. So that means accounting will be quite fancy.
Yeah.
So they gave two recognition exemption, or under two factors you can use recognition exemption. You can use, it's not a compulsion. Okay, what are those two conditions or two features? One, if it is a short-term lease. Two, if you have any asset, if you have a lease of low value assets. Yes, short-term lease and low value assets, you need not do all of this fancy accounting, sir.
Yeah.
All right. What accounting will you do then? What accounting will you do for these two? You will do simplistic POC approach. Okay.
Yeah.
Lessee will treat lease rental paid as an expense and he will book it in P&L over a straight line basis or any other systematic basis. Straight line basis means there is any difference between the expense and the amount paid, that you will record it as either as a prepaid expense or outstanding expense. Yes, no? Okay, so that is for short-term lease. In fact, what are the features of short-term lease? Yes, quickly. What are the short-term lease features? Short-term lease is a lease which has a term of less than or equal to 12 months. Okay, 1. 2.
No value.
Huh? Hey, no die. Okay. Maybe forgot. Even I forgot. Short-term lease is a lease, which has a period of, we wrote, no? What was the one thing we wrote? Look, see, even I forgot.
Yeah.
What are the two features?
And less than 12 months.
No. One moment. What is that? What is it?
Less than 12 months and no.
Correct. See, even I forgot. Okay, short-term lease is a lease which has a term of less than or equal to 12 months and no option to purchase the asset should be there. Correct?
Yeah.
And this term, when will you find out this term? This term is found out at the lease inception date. Fair enough. Subsequent reduction of term you will not get any recognition exemption. Yes, no?
Yeah.
Then this is for short-term lease. Low value assets means, first of all, it has to be an asset. Asset means it should be used independently. Lessee should be able to use the assets on its own or with existing resources. Two, it should not be highly interrelated. And one condition. What is that? Two asset features ka condition. Second, the third condition is you should not sublease the asset. You should not. That's the condition. No? You should not sublease the asset. Fine. All right. Then they told this lease is trying to capture what? Those contracts which have the assets which are high in number, high in volume, but low in value. So individual assets you can analyze. Correct? No. That is low value assets ka exemption. Fine?
Yeah.
Yes, no, sir. But if you want to use LVA exemption, then you should not sublease the assets. Fine? No. Correct?
Yeah.
Any confusion, sir? That's in fact we learned also. Okay. So that is the low value lease of low value assets ka funda.
Yeah.
Okay. Then next, what did we see after that? We saw lease ka definition. After lease, what did we just check? Any features we saw? We saw SSR. We saw SSR. SSR means substantial substitution rights. Who will have this? Substitution means who can substitute, sir? The owner only, no. Owner will be what? Lessor, which we can call it a supplier. So you can call it a substantive substitution rights or supplier substantive substitution rights. If supplier has SSR, what will happen? Then the customer will not have, then the lessee will not have IA. Correct? If customer does not have IA, that means what? Lease will not be there. Got it? And when do you say supplier has SSR? Two conditions are satisfied there. What are the two conditions? One, he must have the practical ability to substitute the asset throughout the period of use. And two, it must be beneficial for him to substitute. If these two are satisfied, you could say supplier has SSR. Done, no? Okay. Substituting after a certain period of time or substituting after occurrence of a particular event, will that be treated as substantive substitution rights? If vehicle breaks down, I will substitute. Or after 1 year, I will substitute. Will that be considered as a substitution right, sir? No. Substantial SSR means it should be there throughout the period of lease. Correct? No. Not at a particular point of time. And what is the general rule of SSR, sir? Generally, we assume that supplier does not have SSR. Unless you have to specifically prove that he has it. Otherwise, generally, we assume that he does not have. Yes? Okay. This is 1 year SSR funda. Next, identified assets. Asset can be identified provided it should be physically distinct. Is it necessary whole asset should be physically distinct, or even part of the asset can be distinct?
Even
part of the asset could be distinct, like building. Correct? But if there is one asset used by multiple owners, multiple users, then you have to check which user is using the asset ka substantial capacity and getting substantial benefit. For that guy, it will be identified assets. Meaning for that guy, it will be lease. For others, it will not be lease. It will be a supply arrangement, purchase sale agreements. Done now? Okay, this is what we have learned so far. We'll take a small break and we shall resume the balance. Thank you.